Singapore. I started my VC career back in the dot-com days, year 2000, with Singtel Venture. So I've been through a couple of crises. So for SPH Venture, we typically invest in early stage company in the intersection of media as well as technology. We invest globally and
Series A and Series B early regional expansion focused investor. I myself have been in Southeast Asia since 2005 and joined my first adventure, IDG Ventures Vietnam, in 2008, 3 months before American banks started going under.
Francis?
Hello, I'm sorry, somehow it seems that I can't open up the video here. Can you hear me?
Yes, we can hear you.
I have some problem with the video, but that's never mind about it.
But your voice loud and clear.
This is Francis. Yeah, this is Francis Wong from Sumitomo Corporation Equity Asia, which is a corporate venture capital arm of Sumitomo Corporation for the Asian region, which I run it. I started my venture capital career back in quite some time ago, like others panelists here. I think I started back in my in the bubble days back in year 2000, but this is my 21st year in the venture capital industry. I joined the industry with World International, Hong Kong, China, and then and then I joined Sumitomo Corporation to run the Asian venture capital business back in just before the financial crisis, actually, the last financial crisis in 2008. So like other corporate venture capital, the mandate is is more about seeking investment, with strong strategic purposes. That is synergistically, to our company, industry business, which I think all others corporate venture capitalists are doing. Okay.
Hello, Ian.
Okay, guys, Jolene here. I'm just going to interrupt once in a while because I'm actually observing the quality of this discussion. So I think Francis, you and Janggan, you may have to speak up a bit more. I think some people may find it hard to listen to hear you. Yeah. So I hope you don't mind.
Can you hear me well now? Can you hear me well?
I can hear you well now. Yeah. Mm-hmm. So if there's anything,
Okay.
I'll let you guys know, yeah, as you go through the discussion so that we can actually capture it properly, okay?
Please do.
Okay, yes. Okay, so I think, Janggan, I'm going to pass the mic back to you.
Sure. So I think we heard Francis pretty well. And Ian, you are next.
Yes, hi. JG, thanks for the invite. My name is Ian. I'm the founder of Juron VC. I'm based here in Shanghai, and we have offices in Shanghai and Beijing. So I was previously also in a Singtel affiliated company called Lycos Asia in 2000. Later on, I joined the venture industry in 2004. I was lucky to be in both Kleiner Perkins and Matrix China, and I started this fund in 2014. So we are focused mainly on the B2B area. We have invested in areas like supply chain, logistics, enterprise software, investments in Southeast Asia. So predominantly in areas like e-commerce, payments, and logistics. So our average check size is anywhere from $500,000 US. I think our biggest check size we have done so far is $5 million US.
Mark,
Mark, are you there?
Oh, sorry. I was So let me repeat. My name is GMIC. I'm actually a managing partner, Southeast Asia for Gobi. So Gobi is actually a pan-Asian fund. It was started in China in 2002. We expanded into Southeast Asia in 2010. So to date, we actually run 11 funds across China, Hong Kong, Southeast Asia. We've made about 250 investments across Asia. So myself personally, during the .com days, I was actually an entrepreneur, a tech entrepreneur based in Silicon Valley. 2008, I was actually with the Singapore government digital media fund.
So good, and it's interesting that a few of you brought up .com days. So many of you have been in the industry for long enough. If you think about .com, that's almost 20 years from now. So obviously, there's no denial that we are in a crisis. And so compared to the crisis in the past that you have seen, how does the current situation differ? And how do you see the severity and also how should people respond to that? I mean, if anyone wants to take it.
Well, let me have a first go at this. I think this one is definitely unprecedented. I mean, compared to what we experienced in 2001, the .com burst, and 2008, the Great Depression. I think this one, in all levels, is a lot more serious. I think we're seeing in some areas, a total collapse in industry. So I think whether you're in the travel industry, which is a big area in China, and as well in Southeast Asia, I think that's having an impact on all our investments in that sector. So I think we are seeing, after a 10-year boom cycle, another more serious industry. So I think we're going to see a bit of shakeout, not only in startups but also in the VC industry. So I think if you are, I think one thing that we have sort of realized in China the last 3 months since we came back to work is that if a lot of the startups that we have invested, the portfolio investors, or startups that we are talking to, anyone who has raised money prior to January, that valuation is actually quite, shall we say, is not relevant anymore. Any valuation after raising after February, that is a new norm. That's a new mean. So I think that is a strong direction in trying to reposition. There's a lot of convincing on a lot of entrepreneurs to accept that reality. I mean, the paper gains that you have made in last year or the year before, 2018, 2019, that has all gone down the toilet, basically. So if I want to say, I think the 2020 is a lot more serious than what we have experienced in 2008, 2009, when it's just pure a financial crisis, and 2001 where it was just a .com crisis. This is across all the board.
Sounds very, very agreeing. K-Mark, Gobi also has a large portfolio in China, and you also have seen a few cycles. How do you see the current crisis?
Sure. So maybe I just speak from the Southeast Asian perspective.
Sure.
I think number one, 2008, the financial crisis probably is not too relevant for the Southeast Asian startup ecosystem because I think at that time we don't really have much of a sort of institutional investors and startup ecosystem in Southeast Asia, right? So if you want to really compare the crisis, which actually impacted the ecosystem in Singapore and Southeast Asia, I think we have to go back to the .com days. So some of the guys who have been through the .com days, they would have remembered. I think in those days, the Singapore government is actually very active. I think there were some startups in Indonesia as well. But the main hub of startup activity in Southeast Asia was actually based out of Singapore. In fact, the Singapore government set up it's called a Technopreneurship Innovation Fund. So it was actually bad timing. So they set up the fund They lost quite a bit of money, and that's why I think after the dot-com crash, I think in Singapore, the government actually stayed away from startup for at least 5 years. They're also well-known institutional VCs. You see them operating today, but right after the dot-com crash, I remember they actually shut down offices. Some of them actually hibernated for a couple of years. And during that boom time, what happened is a lot of entrepreneurs from Singapore, there were some who actually raised money and then they went over to Silicon Valley. So there's really no sort of regional market in Southeast Asia then. Then there were some local companies that, they were successful raising locally, grown locally. They went public, so like Horizon Technologies in the online education space. So I'd say that was the stage where Southeast Asia was. So which means 2020 it actually is much better shape. I think despite this correction, if you compare to 2010, when really there's not much activity, and 2000 when there was a huge correction, 2020 looks like it's much better compared to those years.
When you say much better, does that mean that the ecosystem overall is much more sort of sophisticated? But does that mean they are also much better in responding to the crisis?
So I think it's a matter of having gone through the different cycles. I'm just speaking of Southeast Asia, right? So 2000, really, that's the only ecosystem is actually Singapore startups that's plugged into Silicon Valley. So I think there's only one ecosystem. 2010, I think China has taken off. Southeast Asia hasn't taken off. If you look at 2020 for Southeast Asia, the amount of funding that we have, you really have unicorn companies that wouldn't have been possible in this part of the world 10 or 20 years ago.
Good. Bom Bin, you also involved in the ecosystem in Singapore. I mean, how do you see that? Do you have a different perspective?
With regards to the crisis, like
yes, and especially compare this one to the past crisis.
Okay, if you look back at 2008, as what K-Mok said, right, the ecosystem was still very nascent in 2008. The guys who were affected are mainly the private equity guys looking at opportunity in Southeast Asia. But if I recall, the rebound from the crisis was pretty fast. Most people get affected in terms of slight pay cut. Not many lost their job, etc. And definitely no lives were lost. And looking at the current situation, we are talking about people losing their life, change of behavior. The whole industry, be it tech, be it non-tech, are affected. So I think this time around, as what Ian has mentioned, is definitely more severe than before. We're talking about the whole psychological change in human nature, right? People may be very afraid of going out even after this COVID. People may consume less of outdoor events. So things will take an impact. A lot of business will have to rethink about their business model. Will have to rethink about how they want to engage their customers, etc. So I think the crisis, all crises are different, but what do we do after crisis is the one that's interesting. I mean, the good thing about crisis is that they remove a lot of companies that shouldn't be around, right? Those that's been funded by easy money with no clear business model. And we see that in 2008, we see that in .com, and every time companies emerge stronger after that, right? So I think the same will happen for this current situation.
Thank you. Francis, there's a saying that in every crisis, it's the Japanese who come out and invest. And in your perspective, how do you see this compared to the past?
I think that's a joke.
Yeah.
Or there's also saying that the Japanese always the last one to come out, lose a chair. Which is just kidding.
Yeah.
I think I think the panelists just now share very well the point of view. I think this crisis, as you are all aware, it is indeed historically unprecedented. I think it is unprecedented in terms of the nature of it, the very characteristics of it, which is sort of not man-made. Well, which is still controversial, but the fact that it's not really man-made, which means that it's actually utterly out of human, rather hard to predict what its outcomes will be like. When you talk about financial crisis back in the 2008, or even talk about the internet bubble back in almost 20 years ago, I think that somehow is, the is the outcome of the what I call the institutional weaknesses. So if so somehow if the institution can rectify itself, then it could be controlled. But these things, somehow we won't be able to see the outcome of it. So that makes me wild scared. But on the other hand, if you really look at the what I call the market indicators for comparisons, I think the good point about what we are seeing today is we look at the stock market. The stock market hasn't really dropped to what I call the crisis level yet. We talk about the internet bubble, Asian financial crisis, or even the financial crisis back in 2008. The stock bubble, or basically stock market dive down more than 50%, over the previous 3 occasions. And right now we are still not seeing there yet, because people are debating whether this pandemic will become structural in long term. And also because I think right now the central banks worldwide are seeing they do have lessons learned from the cases that that they do have what I call we're not sure whether this measure will work, but the countermeasures that have tried so-called this quantitative easing back in 2008, they're doing similar things together. And because of the previous lessons they've learned in 2008, that actually we are seeing massive influx or the injections of capital into the market in order to avoid the liquidity seizure that we have gone through back in 2008. From a macro standpoint, especially from Sumitomo Corporation or other large corporations, or other institutional investors, we are all LPs. What I saw was the tremendous liquidity seizure of this stuff, which actually impacted down, all the way downstream to venture capitalists, to funds, and of course, at the end of the day, to startups. And to share with you my experience, for 2008, 2009, we rarely could invest in a single dime into startups because of that particular reasons. All the corporations, capital rationing is tightening up. So that was what we saw in 2008. Right now, from what I can see so far, luckily we are not seeing that extreme at this point, because of the reason I mentioned. The central banks are really pumping money really, really fast into the market, rather than waiting it out. So we are still seeing there is still the liquidity is still running into systems. But I think the catch-22 will be if this persists. If this continues to persist, then this structural issue will start to emerge, and God knows what will happen. So I think that's where the unpredictability of this pandemic, which is the most tricky part that I think the whole world is going to handle.
Thank you. Dimitri, you were in Vietnam in 2008.
I was. It was fun. With respect to colleagues from Singapore ecosystem at the time, there were already things happening in Vietnam a few years earlier. So by the time I joined IDG Ventures, I think they were already at 30 startups. And it was fun to try to remind our potential follow-on investors from the United States and from Hong Kong and from Japan, where Southeast Asia even is. They all checked out and focused on their own affairs, which is what I believe started the integration of Southeast Asian startup ecosystem. This was the first time when I saw Vietnamese startups traveling to Jakarta to fundraise, guys from Thailand showing up in Singapore and saying, we actually have internet. So that was the Vietnam bit. Generally, on the difference between 2008 and now, and for that matter, 2000, 2001, I do not recall from the previous crisis any sense of optimism emerging from collapse of financial system or a bunch of over-leveraged investors going bankrupt. This time around, half the information flow is about terrible things that are happening outside, but I also see a strong undercurrent of optimism where people say, oh, look, half a dozen value chains where nothing happened for years. because regulation was in the way, or city governments were in the way, or large retailers were in the way. Suddenly things that were supposed to take another couple of decades are happening within months. So a whole bunch of technology-enabled value chains are starting to transform faster than they possibly should. And on top of that, I'll just remark on one more thing, that right now we have a very interesting compound crisis. A pandemic and a hopefully short and very sharp shock it delivers, it overlaps on top of a much slower, longer, and therefore slightly less visible shock, which is the deflation of a slightly overinflated technology ecosystem of last few years. Private capital valuations not matching IPOs, mega funds failing. You remember all of this stuff from just a few months ago. Feels like a lifetime. So right now, this slow deflation that started middle of last year is combined with sharp external disruption. I don't recall anything like that in 2008. This is very interesting to observe.
Okay, can I say something?
Yep.
I think I agree with Dimitri. I think so. If you look at a general macro perspective, it's obviously a bad situation. But if you look at VC investing and startup, we actually only care about certain micro things, right? Because startups thrive on disruption, right? So this COVID situation are actually creating certain winners, like what Dimitri is saying, that is accelerating some of this adoption. So for example, you look at if you have investment in online gaming, online education, things that's allowing people to work from home, for example, logistics. I think there are going to be clear winners out of this pandemic. So I think what matters, if you look at it from a VC perspective, is whether you have selected companies that will benefit from this kind of disruption.
How do the rest see this perspective?
I mean, I think in every crisis there's going to be opportunities. So I think that's a given. I mean, if you really look at it, I mean, the 08-09 crisis, I think you saw a lot of startups that came out from the US, whether it's Airbnb, Uber, all came around that vintage year. I think in China, 08-09, I believe Meituan started in 2009. So yes, you don't have opportunities. I think that is a given. I think what it's going to be painful for Southeast Asia is the withdrawal from capital market will be a lot more significant. So I think point in view, even in China, we would see capital leaving the market. So whether you are a VC fund that's funded by university endowments, all right, that's what happened in 08-09. They would start to evaluate who are the winners, who can we live with, who can we not live with. So there would be some trickle down effect from this, from the fund side, and the fund side from the LP side down to the GPs to the startups. So if you are a fund or if you are a startup who managed to raise a fund January the 15th in 2020, congratulations. You're in good shape. But if you are a fund or a startup planning to fundraise this year, then it is going to be a lot challenging. If nothing else, is that we are now stuck at our locality. We can't do due diligence. We can't do due diligence on startups. LPs can't do due diligence on us. So we don't see this thing unfreezing until maybe September of this year. So I think that's the reality. I think we're going to see at least a year and a half in the startup. There's going to be opportunities, yes, but there is going to be a shakeup. So what has happened in China, like guys like Luckin Cafe, or in Singapore, like King Hong, the oil broker, there is going to be, a disruption, or shall we say, the tide has left, and a lot of those guys stuck on the beaches. Unfortunately, they will not survive. At least that's my 2 cents.
Francis, from both LP and GP point of view, how do you see this viewpoint?
Sorry, can I know what's the question again? I think I missed that question earlier.
The question is that of course there are shakeups and there are also opportunities, but I think because people can't physically move, so lots of things are going to be delayed, and that will cause casualties. So LPs can't do due diligence on GPs. GP can't do due diligence of startups. I mean, how do you see this, and how do you see this end? I
think we need to look at things with a longer term perspective, gentlemen. At least from our side here, Sumitomo, we internally have been also, well, for sure, I think everyone of you is also doing the same thing. We are, there are a lot of internal discussions about, what is the long-term implications of the pandemic. I think like all crises in the past, I think, let's say for example, the 2008 crisis actually set the tone of what I call the political economic development for the next 10 years, well, which we have just gone through, okay? So we are basically evaluating that kind of scenarios for the next 10 years too. And we actually feel this pandemic is going to set a tone for the next decade or so. And, LPs and also GPs, I mean, we also invest for long term. So, having said this, pandemic is sort of historically unprecedented. From our latest evaluation standpoint, I think this pandemic will drive a lot of new innovations, especially in biotechnology as a result. The situation is actually similar to the technology innovation right after the Second World War. The Second World War, which is also the human tragedy in a global scale, actually drive the innovations. What we are seeing today, the IT innovations back in 80 years ago, computer, semiconductors, software is actually all started back in those really long old days, and it just persists until where we are now. So we are seeing similar situations. No, of course, I mean, not exact analogy, but it would be a similar situations. We are seeing, well, let's say, for example, I mean, I think it's getting very obvious that the worldwide we are seeing a worldwide concerted effort in driving what I call the fast prototyping of vaccination. Which is whether it will come out, in 12 months or 18 months of time. But I mean, in terms of the pace they're trying to get at, or target trying to get at, is absolutely unprecedented. So we are, so that is, we are going to see some breakthrough in technology somehow. We all know that there was a boom of environmental, renewable, and energy technology things like that back in about a decade ago, but it didn't go anywhere. Okay, but I think the reason, I think the frequent talk about the global climate crisis, I think, which people also debate whether this pandemic is a result of this global climate crisis. I think that will also lead to what I call the rekindled interest in pushing this, or pushing technology along this front. Okay, so which means that this is also an opportunity for venture capital. So definitely, I agree. In terms of principle, there is a crisis, there always opportunity, and but I think from an investor standpoint, because the panelists are all very seasoned veterans, they've been going through all the up and down cycle of the past 2 to 3 decades. I think the key principle is to find startups that can really weather all this up and down cycle. It is tricky, but I think that's the key principle. And somehow, technology like this video conferencing stuff, I think this is not new to everybody. I mean, the video conferencing has been around, almost 20 or 30 years ago, and what I sometimes coined is what I call the recession-proof technology. it sells in good time, it also sells in bad time. So I think that is, I think it's an interesting piece of, it's not technology, but it's an interesting piece of, the idea that, that do have what I call the, up and down cycle, that is sort of foolproof to up and down cycle. I believe there are also others something similar along the way.
Let me take one step back. End of last year, there was lots of discussion saying that the world has not seen a major crisis for about more than 10 years. There's bound to be something happening. Maybe 2020, maybe 2021, maybe 2022, but something might happen. What is that trigger? And as you only mentioned in the beginning, nobody predicted that a virus coming out of a wet market in Wuhan, or some people dispute that it actually came from a lab anyway. So that virus actually caused everything to change so fast. But as of end of last year, I mean, did you guys sort of realize that something might happen, and how did you prepare for it, and how did you prepare your portfolio of startups for it?
I think even before end of last year, even Q3, Q4, we're starting to see a bit slowdown in fundraising activities already, right? Ever since the WeWork fiasco, with the drama with SoftBank, I think a lot of investors start to recognize that SoftBank's investment is not necessarily the surest way to making money, right? And even second half of last year, we noted a slowdown in terms of fundraising. A lot of growth stage company take a longer time to raise. So it started even earlier than the end of last year. We presented to our investment committee finding recently as well, that we tracked the dollar invested in startup. We noticed a big decline in the second half last year. Start of 2019 was still very bullish. Obviously, 2018 was very, very good year. And then with all these, unicorn being pressured to go IPO, and then WeWork, numbers start to come out, and all the greed that investors are being perceived to be looking out for themselves, etc. I think that has an impact. So that's kind of what we observe.
For us here in China is we've seen a mini financial crisis starting in 2018, 2019. First slammed down on a lot of wealth management group, plus following a slam down on the wealth management, private banking, P2P loans, and so on and so forth. Plus the fact that the significant collapse in the stock market in 2017. So if you look at fundraising in 2018, 2019, the China has two distinct groups: the RMB fundraising and the US dollar fundraising. RMB fundraising for the early 2015 to all the way to 2018 has always been surpassed the US dollar. You can argue that if being a GP in China is easier to raise from an RMB fund and raising an RMB fund and from a US dollar fund. But since 2018, with all this mini financial crisis that happened in China, that has collapsed. If you look at the 2019 figures, both fundraising and direct investment in venture actually collapsed, especially significantly in the RMB fund. I mean, and for those who are not aware, I think for every $10 invested in venture, $7-8 is from RMB. So that is what's so significant about that. And I think one of the factors that we see in Southeast Asia is that a lot of the funds that started in 2011, 2012 went from a 3-4 year investment cycle for a fund, meaning we started with a small fund and then invest 3 to 4 years, where spread over their investment over different vintage years. Now we're seeing funds that are investing in 18 months. They fully deployed the fund in 18 months and then fundraising. I think that happened in Southeast Asia and that happened in China. So that was a big warning sign for us. So I mean, for our portfolio, I think since 2018-19, we've been looking at more investments in companies that have the ability to generate cash flow. And two is that there is a financial business model from day one. And if it's a business model that relies on significant capital to bring it up to the next level, these are companies we are not confident of those companies raising funds going forward.
Bianca, maybe I can jump in here. So I think from my perspective, it's actually easy to see, I think, the market going very bullish. But I think what's hard to predict when is that correction point. So obviously 2020 is triggered by this pandemic. But if you look at year 2000, when the .com was doing well, actually it's very difficult to call when things will start to change. And the trigger was actually first quarter of 2000 when Microsoft released a bad quarterly result. So I think a lot of times the correction is actually very hard to predict. But I think the more important point I want to sort of bring out here is it always bad that there is a correction, right? Because if you look at the VC industry, when times are good, the problem is there's so much liquidity, right? So I think Boon Peng mentioned. So usually these kind of .com, days, you actually get a lot of businesses that's funded that has no business model, right? Basically, it's just because there's so much money chasing things, right? So what the downturn typically does is actually you weed out the weaker competitors, right? So there's a certain function that the downturn bring to the table, right? It's actually trying to help you. So as an investor, you're trying to invest in the winner, right? But the downturn will actually help you select the winner, right? Because in a bullish situation, you have to fund so much because all these competitors are actually getting funding as well.
Yep. Dimitri, your sense?
Well, to the original question of how do we prepare portfolio companies, you would be surprised, I guess. We've started a project, The Winter is Coming, because we believe the world has just gone insane and all the valuations stopped making sense in the middle of 2015. I miscalled that one very badly. I remained very pessimistic about the market in 2016. Started tearing my hair out in 2017. Realized it's not possible to, let me rephrase it. The market can stay irrational longer than we can stay solvent. Prepare any particular company to an event that you cannot predict. Instead, you can just engage in proper portfolio construction. So we gave ourselves an internal rule. If we see a company without substance, but with a lot of momentum, great co-investors, lots of growth, fantastic team, hot space, unreasonable valuation, all this good stuff, but no business model, we'll do one of those out of 10 in our portfolio still further noticed. And that's how we've been going so far. Now we can talk a little bit about, I'm sure it will come up in the next questions, as to how we prepare things after the crisis hits. But before, I agree with my colleagues, it's well, bloody impossible. If you ask me, the unreasonables in the market started all the way back in 2012. If you remember Kaufman Foundation's report, we've met the enemy and the enemy is us. That was 2012. I just looked it up just before unicorn era started. But that's for a separate topic.
Can you repeat the last part? I think I missed the last part.
Oh, the last part was about if you're trying to look for the roots of the currently deflating bubble, you can go even before Tokopedia grab, you can go even before SoftBank, you can go right to 2012 when Kaufman Foundation did a pretty substantial bit of research from the LP perspective called We've Bet the Enemy and the Enemy is Us, which I think laid bare entirely all the flaws of what we now call VC ecosystem.
Interesting. Anyway, so Anyway, so I think what has happened has already happened, that we are all in this situation now. And in the market, you hear the headlines every day. So and so is laying off, and so is stopping operations, and etc. etc. So how would you advise people, and especially startup founders? I mean, beyond obvious things to conserve cash flow, etc. etc. To actually, I mean, stay on top of this, especially when we are not sure how this is going to end. I mean, especially for those ones who are not so lucky that they didn't raise money before the 15th of January. Anyone?
Yeah. Just to preempt, of course, we'll talk about cutting costs and reducing payroll. All of that is quite straightforward. Two things that founders who haven't been through this exercise before do not immediately think of are grab talent, whatever talent is falling out of competitors who are doing this very same thing. Even if you have almost nothing to pay them with, there is always equity, there is always ESOP plans, there's always core investors who understand what it's like for a startup to get a proper CEO on board, a head of product. And the second thing I'll just lob in there for further discussion is fantastic opportunity to clean up your cap table. That angel that has been nagging you about 100x return for 10 years, that clumsy investor that is value adding to you from 16 time zones away, that uncle from a near who wants 3x liquidation preference in the next round and special terms, buy them all out. They're willing to sell for cents on the dollar, and there is obviously value in every startup, so there will be a right price point for that. So let me just start with these two grenades, and then we can go right back to cutting costs.
Maybe I can join in next. I think for us, I think besides the cost cutting, what is interesting is actually, once again, I think this pandemic always have two sides, right? Because you'll create winners and losers. So I think for companies that have business model, we are seeing them switch to, for example, need to have kind of businesses. So I'll give you an example, right? So let's say one of our staff is actually doing apartment rental. What they see immediately is actually this drop in daily rentals, right? Because it's dependent on tourism, that business is gone, right? But they have shifted to monthly rental, right? Because it's a much more local business, right? People need to rent apartments. So that becomes more like a new business model for them. We've seen other guys that are doing online recruitment, they have switched to online education, for example, right? So I think, looking at your business model, figure out what is need to have versus nice to have is also very important during this period.
Just like to add on to K-Mok's point, I think at the end of the day is really choosing the battles to fight. Right? So the advice I give to my portfolio is basically you cannot have the mindset of trying to conquer all different markets at one go with your limited resources. So it's really down to what is the best way to achieve success with the limited capital that we have, right? So if you need to cut a market that you have already invested, but it's still a bloody battle out there and you're still not clear winner, then you might have to relook into your strategy and then consolidate your leadership in markets that you're winning. The couple of years, a couple of months before that, everyone's talking about growth at all costs. You need to be a regional player. You need to be in 4 or 5 markets at one go. You launch at one go, multiple markets, and burning tons of cash. But right now, it's not necessarily that right approach, right? You need to conserve cash. You need to go to a market that you have clear leadership, clear right to win. And then for those markets that have no chance, just take the humble pie and cut loss or divest. Right? So that's kind of one of the things that we focus on.
Anybody else? Okay, cool. My last question for the panel. This has been very interesting, by the way. My last question for the panel is how has your optimism about Southeast Asia, or your pessimism in the case of Dimitri about Southeast Asia, changed? And if this crisis persists until end of the year, And how do you predict the world of in this region in, say, 2022? How would how would you see the region taking shape?
Called me out by name. I have to go first. All right. So the pessimism is slowly being replaced with cautious watchfulness. And I will go right back to the point I made a few minutes ago about how even the clumsiest, most conservative, most slow-moving entities in the region are paying attention now. Like retailers who were still thinking e-commerce is a fad as of December last year are now engaging AWS in massive purchases of new instances and talking to payment companies and logistics companies about setting up deliveries. Not to mention governments of various cities that suddenly are rethinking how, let's say, e-bikes are being regulated. Moreover, there is a factor which has always been present in Southeast Asia since I started here. Just put yourselves in the shoes of a strategic or a significant investor, even if they're not strategic, from Norway, from, yes, Japan and Korea and the United States. If you have investments all over the world, in crisis, which region do you retreat from first? Where do you cut first? Guess. It's not Europe, it's not China, it's not India. Southeast Asia. So a lot of very strategic, very well-funded competition is retreating from the region as we speak, withdrawing their best people, not sending new budgets in. So even opportunities that were supposed to be completely locked for startups are suddenly open because really nobody in the headquarters on the other side of the globe is picking up the phone. They will not pick up the phone for another 6 months. So optimism is emerging.
I just want to add to Dimitri's point. I think prior to this, I think Southeast Asia tend to be in a situation where too many funds chasing very limited or very small pool of talent, right? And especially you look at Indonesia, there's just so many hype about Indonesia being a big market, but this pandemic has exposed a lot of crack lines in Indonesia ecosystem. The so-called unicorns are being under stress. So I think going forward after this pandemic, I'm more optimistic because when there is crisis and when the weak are flushed out, those who survive will be a very attractive investment opportunity for those who are still in it for long term. Obviously, some of the momentum investors will back off, but those guys who have been here long enough, who have been monitoring the market, I think it's a great chance or great opportunity for us to find real gem with not crazy valuation.
No, I'll add to it that in saying that I think there will still be a lot of good opportunity in the early stage. So I see opportunities in the seed stage, angel round, and Series A. I think that's still going to be humming along. I think if you are a Series B, Series C, even Series D company, I think that's going to be a lot challenged because capital market in Southeast Asia is a lot smaller, and you see a lot. Not only multinationals leaving, but also multinational VCs leaving that area. So it's starting to happen. Whether if you are a German corporate venture or whether you're a Japanese corporate venture, Southeast Asia is right down the list at the bottom. So it's nice to have. It's not a must-have. So if you're BCD, yeah, I think fundraising going forward is going to be a challenge. It's time for you to call your shareholders and see who is still around, who is still flush with money, and if you really need the money, really you should consider doing a flat round. In worst case scenario, do a down round. So I think valuations will drop. I agree with BP's comments. Valuations will drop, and I think the opportunities in the early stage and in the late stage. So if Traveloka is coming out fundraising at a a markdown valuation, yeah, I think people will be interested. I mean, the business will still be there after the crisis. That business model is being infected by coronavirus, but but it is a proven business model when this crisis is over. So there are businesses out there, tech companies who have proven business model, who has insane valuation. If this bring them back to norm, I think that's good opportunity, at least for both VCs and private equity.
Okay, maybe just let me share my, once again, Southeast Asian perspective. I think the optimism is always relative. So obviously I agree that, short term, there's all these fund flow and there's impact, right? But I think if you look at it long term, this disruption once again is useful, right? Because number one, on the supply side, I think a lot of countries realize that there's too much supply chain that's being concentrated in China. So you start to see a lot of things move away from China. Look at Japan. Japan is trying to move things back. US, Europe. I think some of these supply chain will also move to Southeast Asia. So you look at Thailand, is already the hub for a lot of this automotive supply for the Japanese, right? So I do see that on the supply side, there'll be some reconfiguration after the pandemic. I think on the demand side, it could be interesting as well, because a lot of government has to reopen. They have to think through how to jumpstart the economy when a lot of economy is not coordinated, right? So which economy is opening up, there's no coordination. So I think cross-border trade may be affected. So what a lot of countries will probably resolve to doing is actually they do have to invest in infrastructure. They do have to create the demand again, right? So I do see new things that's coming up. So let's say if you look at a lot of this labor that's being exposed, in the hospitals, a lot of factory that's going to be built in advanced countries. I think there will be a lot of demand for robotics, because why would you want to have a nurse go into a hospital in a very dangerous situation? You could send a robot, right? So from my perspective, taking a long-term view, there's going to be interesting stuff coming out from the supply side, demand side, that will benefit Southeast Asia.
Francis, I heard the Japanese corporate investors being mentioned twice in the last 5 minutes.
Yeah, I sort of echo K-Bob's comment earlier just now. I think the one mainstream investment thesis for the next 5 years or so, as a result of this pandemic, is going to be what I call the global restructuring of the supply chain, and that's exactly what Sumitomo Corporation is doing these days. We cover China and also Southeast Asia, so we know both sides of the world. I think this pandemic, actually, echoing your earlier question just now regarding what crisis that we will foresee in the next couple of years, I think one major crisis we foresee in the next couple of years, or even in the next 5 years, is one of geopolitical. Okay, I think before this pandemic, I think every one of us is very much aware of this U.S.-China trade war. I think what is not being able to foresee back in about a year ago was that this pandemic came just a couple of months ago, which exacerbated the relationship between the West and China. So somehow this, well, we have been seeing this sort of, this has been around for some time, but somehow this pandemic sort of trigger or sort of worsen this situation a bit further. So now all of a sudden, we are seeing, lots of people really talk about it. We are seeing, especially the G7 leadership is talking about the acceleration of retreating their supply chain in China for very obvious reasons. Some, and yet at the same time, we're not seeing China. We realize that China will not sit there, as a kind of sitting duck. And also we are seeing Southeast Asia as a result, because of the geopolitical proximity to China. I mean, it would definitely benefit from just what I call the reconfiguration of global supply chain. Well, the Japanese has been, like K-Mob pointed out earlier, the Japanese has been, working out their supply chain ecosystems into Southeast Asia. Actually, I don't know since when, but at least probably back in 40, 50 years ago. and Southeast Japanese always has a leadership in terms of the global supply chain or the regional supply chain in Southeast Asia. So from what we see, or from what I can observe here, is they actually further reinforce their their infrastructure here as a result. Okay. Meanwhile, for China, I think China, as I said, they are not a sitting duck. As I think some of us already realize that they are also accelerating their they are doing this 5 or 10 years every time this technology initiative to push technology initiative for what I call to develop the China next generation infrastructures, or infrastructure no longer in the traditional sense, but it's more about the communication infrastructures, information infrastructures. We all know that. Okay, so this is all. So this we'll keep on seeing this massive stimulus from China, to go ahead and to move along that front. I think the tricky point for China over a longer term is, when the exports slow down, and meanwhile the consumption, with domestic consumption, is not rising up on par. I think the question is, if the situation, kind of what I call the hanging situation persists for China, then we have to make some judgment on how risky it will be from the country's standpoint. But at least so far, this is what I can see. I think this pandemic, as I said earlier, is really set the tone for the whole global economy development for the next 5 years, which is very critical for all the venture capitalists and the LPs as well, to decide what the investment thesis will be for the next 5 years.
Thank you very much, everyone. I think it's been a very, very interesting panel. And as Francis mentioned at the end, that it actually sets the tone for the next years to come. I hope that one day, maybe in 3 to 5 years, we can sit down all together to look at all what we have said or what we have predicted, and anything actually happens. But during the meantime, everyone. So I know you can't do due diligence or whatever, but stay safe at home, stay active, and I'm going to pass the mic back to Yolene. Thank you, everyone.
Okay, thank you, everybody. Whilst you guys have been talking, there was a bit of lag in the YouTube channel, so the recording will be sent to all the participants who are still online. And in the later part, it was actually quite good, and I'm getting some good comments from some of our WhatsApp channels saying that this was a very lively and interesting discussion. So thank you, everybody, for sharing your thoughts. Thank you.
Thank you.
So,
thank you very much.
Thank you.
Bye now. Bye bye.
Yeah.
Everyone's
okay.
Good. Bye now. Bye bye. Bye bye.
Bye. Okay. So then, moving on, I would like to invite our second fireside chat, the moderator, Alfonso. Alfonso, our head of Insights and Momentum Works, to be the moderator, and I'd like to invite Jonathan, Yan-An, and Christopher to come on board. So Alfonso, are you there?
Yes, I am here.
Awesome. Okay, awesome. I can hear you well, loud and clear. And how about Jonathan, Yan-An, and Christopher?
Hello. Hey guys, I'm here. Hello.
Yeah,
Yes.
Welcome, guys. Thank you for participating.
Okay, I'll pass the mic over to you, Alfonso.
Yeah, sure. Okay.
Okay, cool.
Well, thank you very much for participating in this webinar. I hope that this conversation, it is actually a conversation instead of just a questionnaire or something that is very boring for everyone. So after the conversation that Yang-An had before in the previous fireside chat, I think that we could just begin by introducing a bit of ourselves. Maybe what if you introduce yourself and maybe you tell us a bit of your experience and maybe a bit of the company that you work. Can we maybe begin with Christopher?
Sure. No, thanks, Alfonso. So super happy to be joining the panel today. Great to meet everyone. I am Chris, one of the co-founders of Yixstay here in Indonesia. And we are a tech-enabled brokerage for rentals, very similar to Ziru in China. And just to give you guys some background, here in Indo, access continues to be the most significant problem for the rental market. Traditional brokerages have simply not wanted to take mid-tier units or even serve the middle class. And it's mainly been out of efficiency reasons. So at UXTay, we've created like an agent network that opens up the affordable supply. And behind that, we've built a CRM data engine that handles everything from lead generation, pricing, all the way to contracts and collections. So really these tools are available to our agents, and in turn, customers can coordinate basically their rental needs with them. We've been around now for 1.5 years, backed by some awesome investors, such as Tangling, Insignia, and Y Combinator. A bit about myself. I've been in Southeast Asia for the last 6 years. I was previously at a VC firm in Singapore, but before that, my career was in the Bay Area. So it was part of AdMob and Google back during the last crisis, building one of the first mobile ad networks. And then later was a part of Groupon Game Time, focused on consumer apps. So this is, of course, first time being a part of GMIC. I really appreciate the invite and looking forward to the conversation.
Yeah, thank you. Great. And maybe Jonathan, can you continue, please?
Yeah, sure. So my name is Jonathan, Jonathan Zhong. So I was, I'm right now currently as a founding partner of ADM Capital. So ADM Capital is the first, VC as a Chinese background to only focus on Southeast Asia. So then myself actually stay Jakarta for almost 5 years. And before I was doing that, I was doing a live streaming startup called Nono Live. So we exited to the Douyu, which is the biggest live streaming company in China at 2018. Before that, I was working in Alibaba as head country manager of UC Web in Indonesia. Yes. Glad to hear. Hopefully we join discussion later.
Okay, thank you. A very nice background, by the way. So now we can continue with maybe Jen An, please.
Hi, very happy to join the conversation. So on Dean Capital, we started in 2018, and we founded the fund with my partner Randolph and I, and we actively seeking startups in Southeast Asia with the potential to actually integrate the local market insight with probably advanced technology, either grown locally or from China or US, because both my partner and I had most of our careers in China and US. Before I started the fund, I worked at JD.com, and then have rotated to JD ID and JD Central, and also helped the Tiki transaction. So quite familiar with Southeast Asia potential. So I'm happy to join the conversation to see some interesting insight within it.
Okay, thank you very much. This was very useful. And so I will begin like talking a bit about COVID-19. I suppose that this is like the main topic for everyone. So for your particular business, how do you think that this virus has impacted your business? And maybe after that, if you can share your thoughts about how has impacted the market, your market in general, and maybe anyone can just begin sharing your experience.
Well, I think most of us actually gonna have a similar feeling, right? So this pandemic actually has a lot of negative impact for a lot of like offline business, face-to-face business, services. I saw some of the retailer, they're going to down 70% of their sales at the market in Indonesia. So, but it definitely is also a very strong stimulator for the pure online business. That's why we say that the online entertainment, online music, online that even e-commerce actually it's picking up, not too much, but still picking up. So let's say if we say in the past, Southeast Asia, most company actually is doing this offline online combined business model, right? Like Gojek, Grab. So they have a sort of like a business of link with the real world, and another part is doing online. But at least this time we see that the pure online company is very limited in South Asia, like Garena. But according to this, I think this pandemic is going to give a positive impact on this kind of pure online companies. This is what we see for startup scene. But of course for the fundraising and VC, definitely right now we saw everyone slowing down and very careful. Mostly are focused on their own portfolios, right? This is what we see.
Right. Okay, thank you. Christopher?
Yeah, sure. I mean, you know, the COVID situation has certainly been terrible health and economic wise. And, you know, without question, you know, Indonesia has been impacted, and particularly the real estate market has been exposed. We've been seeing like constantly. You know, fortunately for us, we have not been materially impacted. Our tenants are all in long-term contracts, so we've only seen a handful of cancellations. And what we've also seen is a higher percentage of renewals simply because of immobility at this point. On the growth side, you know, just given the lockdown, and we are seeing a slowdown. But we are starting to see a change actually right now, and particularly this weekend. And specific to Indonesia, you know, Mudik was canceled, and that's usually the mass exodus from Jakarta back to, you know, hometowns. And we see that, you know, potential tenants are realizing that this is the new reality. They have to stay, and so we're seeing an increase in terms of people looking for places to live. You know, so in our case, our model has always been to provide Indonesian office workers long-term housing. So just given, you know, modest salaries, it has always come down to pricing. And so, you know, we're not in the business of refurbing or standardizing units. And generally we see added costs are actually bad for the end consumer. And so what this means in the COVID environment is that really for us, there just isn't better options out there. You know, we are priced the most competitively. And then meantime, in the overall markets, we're just seeing this rapid consolidation, right? Multinational companies are sort of leaving. A lot of the supply that was previously on their platforms are now coming onto the market right now. And so we're just seeing the market become a little bit more rational.
Yeah, that's interesting. Very interesting. And I think that it makes sense that everyone is taking things a bit more slowly. Yan-An, maybe you can share your experience.
So, well, I think it's a very sad situation for the coronavirus thing. But then, for our fund, as we are not we're not fundraising right now. We have cash on hand, so it's actually good for us because we have the deal flow comes in exponentially. So we have many more deals to see compared to like this before this situation. But for startups and our portfolio companies, we actually think it's a very critical moment for them because most of the times, also from my experience when I running an e-commerce platform myself, it is always very difficult to change people's behavior, which all startup tries to do, and then acquire new users. But this force of coronavirus, like force everyone to do something different, spend their time differently, so create a lot of opportunities for them to acquire new users, and then with this transition, be able to generate different models of behavior, which I think also could be very beneficial to Christopher's business.
Right. So Christopher was mentioning that some of the costs increased, but on the other hand, we have that Yan-An is saying that there could be some interesting opportunities due to this new situation. Can you maybe expand a bit more what kind of opportunities you can actually find? We can actually think in very obvious ones, like, okay, obviously things like Netflix and online gaming is gonna increase, but how do we actually translate that into a profit? I don't know if you can actually help me a bit with this.
Sorry, who's that question for? Was it for me?
It's for everyone.
So maybe I can.
Yeah, you do first. Right.
Yeah, maybe I can jump in here. So you know, I think you know, of course, the situation is really sad, right? But I think what we are also seeing with just, the last few years of investments, et cetera, and strategies is that it's really been, I would say, race to the bottom tactics and subsidies, right? And so that has really just skewed unit economics, et cetera. So we actually see the correction in the market as being rational, right? And so, specifically on the supply side, right, owners are not, they can't rely on effectively like venture-backed cash to sort of meet their yield guarantees on their properties. And then on our side, it really is about optimizing our business, right, to be efficient. We are very adamant about being, contribution margin positive. And really, it's really evaluating everything, right? So we see, downstream aspects of our business that we can optimize, right? Vendors and vendor prices are decreasing right now, and that makes it, that's either cost that we can reduce our sort of bottom line, or we can pass it off to our customers who are in need of like.
Jonathan, you want to say something here?
Well, I think what I observe, I share that if you look at the Google Play top grossing in Southeast Asian countries, you understand actually it's quite different, like compared to half a year ago. So you will see that before all the people paying for the games, right? But right now, if you look at the Google Play, you understand that the people are starting paying for the social media for the strangers. People are starting paying for the games. The novel books. People started paying for cartoon. People started paying for all these online entertainments. So that's why this actually is a change met of the user behaviors, actually format of user behaviors. What I saw. But and also that I saw some of the companies are trying to pivot the business to have a little bit cash to support their members. And now they are moving to 2V. That means they can generate some of them cash to support them. But fundamentally, I think this is at least special moment. It's important to think about the fundamental of your business. Fundamental that is that business you are building is actually stable for a longer period, like 10 years, 20 years. Is it any kind of like problems can happen to hit you very badly? How do you balance yourself, right? So this, I think, is to give us opportunity to really think about the business fundamentals.
Yes, I agree with Jonathan. I think the change of this coronavirus changed people's behavior. So we can see that from the numbers, the time that people browse on YouTube is 10 times more before the coronavirus, and also the ad spending. So like apparently there will be industry or type of business like online gaming, like online service, online education will be benefited from this situation. But more importantly, I think is that even if you are not online gaming or e-commerce, startups should try to use to like truly understand or to at least analyze how people's behavior change because of this virus thing, to adjust your way of acquiring users using different content, different channels, and then more efficiently get users who normally wouldn't be interested in your platform or your business. That include probably like giving different gift or brochure that people like normally do not have enough time to in the ad. Now they are staying at home and they will spend time on that.
Right. Yeah. So I think that there are like 2 points that you mentioned that are very important. Like Christopher mentioned, like that you need to be more competitive. You need to be basically improve your services, begin competing with you at a certain point. For example, in the case of Christopher, this could be a bit more, it could be a reality that will happen more sooner. Because in the case of Jonathan and Yenan, you work in a very different kind of company. So Christopher, maybe this question is more related to you. Don't you feel or don't you think there is some kind of threat of companies moving to compete with you in a near future?
Yeah, sure. So, you know, we're seeing a few things. One is, I think even prior to the coronavirus situation, you know, the real estate market here was already being hit. And we, of course, saw different models, et cetera. And I think, you know, relating back to the previous panel discussion, we're seeing, you know, multinational companies really decrease their presence here. However, that being said, what we're also seeing are things like, you know, Airbnb switching into long-term rentals, right? Which is very much what we're doing. And so I think the thought process is that we're doing short-term rentals are actually making that switch right now. But that being said, one thing that we realized, you know, because we did experiment with short-term rentals a while back, is that it's not something that you can just, you know, snap your fingers and that will happen immediately, right? A lot of the, especially with rentals, given that it's a service-based industry, you know, and it is this online to offline sort of experience, in particularly controlling your top of the funnel is the most important. So as I mentioned in the beginning of this panel, we have our agent network. And so what we typically see with existing sort of players is that they either rely on third-party brokerages or they get squeezed by OTAs, right, when it comes to the short term. And so while I believe those shifts are happening, and I think, you know, what we see just in the market is that everyone is trying to figure it out. We do think that like we're well positioned to defend against it.
Jonathan and Jenna, do you think that the competition is changing the way that they're doing their businesses?
I think, well, there will be probably new competitions, but I think startup who have already in, say, like online business or e-commerce shouldn't be worried too much about like a previous offline company and decided to, say, like start a new online department to compete with you, because like it's actually, if you are like, it echoes what Jonathan says, if your fundamental is good, your product is good, when people, they spend more time online and see your product compared with the new product that provided by the offline company, and then it will only increase the competitive advantage if your product is better, like people, like the feeling is stronger, you know. But at the same time, I think it would be very important for those like previous online companies to find ways to actually expand sort of like horizontally to increase their competitive advantage. For example, say you are an online education company, you provide tutoring or you provide online course. And now that people like previously only spend like 10 minutes on your platform, and you definitely want to try to add more either content or channels or services, like, because people now will spend more time on it. You can do it on your own, or you can probably try to work with other startups to do that. And that's how we are helping our portfolio companies doing right now. So like just like collecting the users, collecting their resources to make the whole online experience more reachable. And I think once you build that, it will be a huge advantage for you to compete against those previous offline companies.
Right.
Okay, so I think I agree with Yan in a large extent. But there's also examples I actually want to mention here. For example, like Walmart actually is doing quite successful on the online selling right now, compared to what they're doing, 5-10 years ago, of course, in US. And if you look at then they can consider be a good competitor for online shopping, right? But in China, if you look at the online education, actually some of the company like Huawei and that like New Oriental, Xindongfang, which is that originally start from offline, right? Then they are then adopted the knowledge they are merged as an online merge with offline OMO company, then start to building their presence online, and they become very very strong competitors in online space as well. So I think this pandemic is give us the opportunity to think about if you are not your competition. Before we only think that is that the new startup, the online player is all competitor, but at this new age, I think because the people are going to moving for diversify themselves. Offline can be they will try to diversify them. Online company try to also build their business models all offline. So in this case, give us idea. We should really, when we think about the competition landscape, we should also think about the whole verticals, like whatever their online offline competitors. And in the future, we're going to meet each other because online company is going to offline company is going to online. It can be all emerge, they can all convergence in some time frame. So if we're competing in the future, we're competing both online and online company, online offline company at the same time. Are we still have a really good products? Are we still have a very good value proposition? Are we still have very high efficiency versus others? So that's why I think this gives us a new angle to look at the fundamental of the companies.
Yeah, that's great. And I think that this is particularly interesting in Southeast Asia, because in some cases you see that the smartphone penetration and the technology is increasing, internet penetration is increasing, but on the other hand, you have that there are many offline services that are not there yet. For example, we have that, like in Indonesia, like less than 5% of the population have a credit card, for example. So in terms of that, how the online businesses are going to strive. So you have to be very careful actually when you are trying to position your business only online, because there are many things that may be missing in the offline channel too. So I think it's very interesting what you have you have been actually mentioning. So for Jonathan and also Yenan, you as venture capitalist or working in a venture capital firms, don't you think that it may be an opportunity to filter better the kind of company that you want to invest? Because in some cases, these companies may reveal what's the reality after the virus. Because in these difficult situations, at the end, everyone is showing like their performance. So don't you think that this may be an opportunity to actually invest in a better way in this kind of companies, or maybe to change the way that we are actually measuring companies in order to determine their success? Go ahead.
Oh, yes. In fact, we even though that we are receiving like more deal flows right now, but I think our criteria is still the same, because all in all, we still think that coronavirus, well, it's very serious and could last for months, if not years. I think the fundamental how we evaluate a company is unchanged. What may change is that we are aware of this special situation, and we are more than willing to help companies that could like they are suffocating right now. They are actually in good shape. They are just lack of this one breath. Then we will be more flexible in terms of the speed of evaluation, in terms of the form of evaluating the company. So that's our side.
Right. I like your that it really matters in a company, but I also wonder about why there are so many startups failing. And I think that in many cases it's because they are getting some kind of funding that they shouldn't have, because they are not being to do it successfully at the end. So maybe that question that I did, it was maybe related to that, maybe to change a bit the way that we're actually doing things in order to make startups work better, and basically to do our businesses better, right? So I like the answer related to the fundamentals, because I think that everything should be there. And also, we in many cases we talk about like having like a great team, but how do you measure that in terms of performance, right? You may have a great team, you may have a great technology, but if you don't know how to actually use it in order to generate some kind of useful output, it's going to be very difficult to measure the success of the company. But yeah, so now moving to a different point. What do you think, like from your point of view, is the most critical challenge that the online businesses are facing? Anyone can answer.
Yeah, sure. So, I think it's not particular to online business per se, but just being operationally efficient, right? And so, everyone, as you alluded to, is trying to draw out their runways right now, and to make sure that they can survive the situation. And it really comes down to the fundamentals here. And so that's the first point. I think the second part is, and I think generally speaking, is actually on the strategy side. It's really about going back to the drawing board. A lot of the trends, metrics, and insights that were finely tuned like pre-coronavirus probably don't exist now, right? So you have to make those adjustments accordingly, and that spans like all aspects from marketing to your internal processes to even like supply chain. And so I was at AdMob in 2008 during the last crisis, right? And so we were seeing a lot of brands test out mobile ad networks for the very first time, right? Trying to see how they could generate revenue or create brand awareness through mobile ad networks. And I think it's both. Of course, the fear is actually driving a lot of the current innovation, right? And I think the challenges is producing new innovations, right? On either in terms of content or in terms of business models, right? And so we also see like people trying to figure out like what the new equilibrium is, right? What this new normal is going to be. And of course, right now it's very extreme, right? In Indonesia, we have this lockdown, but of course, if it returns back to somewhat normal, I believe social distancing is still going to be in play. So how do you, especially if you're an offline business or have an offline component like us, right? How do you establish one-on-one relationships or customer service without meeting in person, right? And so that could be everything from testing things like video viewings to video checkouts, etc. So I think in general it's just about it's a multidimensional problem. There's a lot of things to optimize for, and sort of it's going back to the drawing board.
Okay, thank you. Jonathan or Yenan, I don't know if you want to add anything else to that question, to that answer.
No from my side.
Okay. So talking a bit about the changes in the consumer behavior, Yenan actually mentioned this about people changing their behavior. And actually basically consuming more online services like YouTube, more online gaming, and the numbers are going up. So what do you think is going to happen once well, it has been, I think that it has been already established that the COVID-19 is not necessarily going to end soon. So, but what do you think is going to happen maybe if things are actually improved? Do you think this consumer behavior is going to remain, or do you think it's going to go back as it was before?
Sure. I think like your previous question, like how online business deal with this situation. So I think online is just an element to a business. Like like e-commerce definitely has a online element, but at the same time, it heavily relies on the offline supply chain, the logistics service. So for different, they need to deal with it differently. And and there are definitely companies that like very like they relies rather lightly on the offline element that I believe would thrive in this situation, like online gaming, like I think like HR service, like job recruiting, online job recruiting, which I think will also thrive because many companies like laying off people and they will find jobs later, and then still keeping the social distance, and then online job recruiting would be something big. But I think for all the companies, including startups and the non-startups, what's really matters is that they need to analyze the data in this period of time differently and carefully, because startups, they acquiring new users in this period of time. It's not a normal situation, so they have to treat this data differently, and they have to retain them differently, like by different ways. They have to be very creative, so they have to be very agile. So like previously, maybe their marketing strategy or like user acquisition, user satisfactory program is one way, but now like dealing with this situation, they have to deal differently, and then treat the data differently, because some people will definitely stay, and then you have to give them new incentives to continue to use your service. And some people that you have to distinguish that they will never, like they will just use it temporarily, and you don't want to spend too much budget on them. And these new data are different from normal times, so they have to, like, I think, really deal with it.
Okay, thank you. Jonathan, you want to mention something?
Well, I think if you want to study on this one, I think we should look back to some of the things happened in last 10 years, right? So in China, there's a SARS, 2003. There's a financial crisis in South Asia, 2008, 2009, and so I think what you can if we can recall that JD actually is getting a huge growth when they start doing this SaaS, right? So when JDs used to be open offline shops, many, then there's a SaaS time, then they start to selling online, and it's getting like step by step what it looks like today. That Alibaba is same. Alibaba actually, the company get the quarantine actually working at home, because they have detected 1 or 2 employees that the SaaS. So they start to find a way to working at home. So that you look at that after the SaaS, actually the e-commerce penetration is getting much more faster compared to the before, right? Because once people realize that they can buy the same thing, lower cost, and also that much more efficient online, they never go back, right? So it's very difficult. So that's why I think this pandemic is a really good opportunity for sorry, it's my.
Yeah, don't worry. It's the new normal, right?
Yeah, so that so that's why I think after this crisis, I think that the e-commerce is going to be doing much more faster compared to used to be like 1 or 2% a year growth as a percentage of the total retail. That's something we can foresee, I think. Secondly, definitely is like online content and consumption is going to going to pick up stuff from now, because once they start to reading start to play games, and this once they started doing this novel and the music, it's difficult to go back, right? So that's why I think we should focus on these things, that these trends that they are changing, but they're difficult. They were not coming back. So the important thing is that how we are going to, as a company, as a company, is going to catch the opportunity, right? So that when when this opportunity coming, how can we catch them? Keep them stay with us after this pandemic.
Okay, thank you very much. I'm gonna do this question now that we have been talking about the new normal. So in terms of the online businesses, and maybe as we already clarified about the just general businesses, how do you think the new normal will look like for online businesses and just normal businesses, maybe from your perspective?
Yeah, so maybe I can add on here, and I think this is also kind of relating back to the previous question. And so, you know, I think a lot of people in Indonesia have lost their jobs, and so you know, what we're also seeing right now is that this sort of agent model is really working out, right? People are looking for independent work. You know, and it's not just you know, like working from home, etc., right? And so, and in particular here in Indonesia, right, we're seeing government support for, you know, re-education and redevelopment of the workforce. So what I see is like online businesses actually taking advantage of this, right, and creating apprenticeship sort of programs for people to learn how to sell, either to make side money or to make it their full-time. So that's number one. Of course, the second thing is that we're seeing like communities move online. So, you know, recently participated on an online workout, right, with 200 plus people, 220 people, and that's in Indonesia. And so, you know, I think more and more so, what we see with these communities is that it's working. People, when they have no other options, you know, they're still able to be motivated with, you know, going to a gym, etc. And so a lot of things are going to happen at the home. And so I think online businesses are going to have to start taking advantage of that, right? Which is bringing the services to the home versus what we currently see right now.
That's interesting, very interesting. Moving things toward the home in an online form. Yenan, maybe you can add anything else?
So more people will use online service for sure. I think I've been emphasizing that repeatedly. So if people start to spend more time online shopping, watching videos, showing videos, and that will definitely change the whole supply chains affiliated to that. So like more directly, I think we will probably see more from sort of like expand from e-commerce to social e-commerce that we have already seen in China. And at the same time, China has probably because it's like the past few years about the artificial intelligence technology, we can see that the new normal will definitely including like facial recognition, including like IoT things that are being deployed in all buildings and also within people's household. I don't think that will we will see the same in Southeast Asia that soon, but probably years later, the same concept will also grow in Southeast Asia as the two regions has such close relationship. And at the same time, I think people will also be like starting, because once that whole supply chain has been previously been evolved from like grow stronger, you will also see services that previously only like or majorly offline coming to online. Something like I would say ordering like business supplies like online, or having people going like deliveries, like deliveries like a same day delivery or same like within hour deliveries that happening in Southeast Asia, which we also have seen that in China already. So I think near term, like people's life will actually, I would say that a lot of business model or business innovation that we have already seen in China in the past 5 to 10 years, I'd say that they will play a stronger role in Southeast Asia, because Chinese internet company indeed is very good at, you know, like using internet to provide all kind of service and like make people addicted to it. And then in terms of the IoT things or the artificial intelligence things, maybe, but I think maybe not that soon.
Right. Thank you. Thank you. Jonathan, I basically ask for the guys what they believe is going to be the new normal for online businesses and also for not online businesses. So maybe you can share a bit with us.
New normal. So
yeah,
I think what is the new normal? So it actually comes from usually in Chinese government they say right now we're going to a middle speed to growth country. GDP per capita, then we're going to a new normal. So what did it say? I think the new normal, for, as I just said, is going to be merge, online offline merge. So they're going to online or going to offline going to online. It's a new normal. Second new normal is that when the company start doing the business, they should also consider not only the product benefit, also need to consider business model and very careful about the cash flow and the working capital, right? So before, actually, a lot of companies, we understand that if they can find the product market fit, it's already very good. So they are sacrificing their business model and also the working capital, the healthiness of the working capital. So as today, maybe you need to consider all at same time, right? Building a sustainable, like a healthy, business for a longer terms. That's something is also going to be a new normal. I think as investors, when we look at the company, we were not only looking at the how hot is the steer, how fast they can grow. We also look at how long they can live, right? So that they are going to, how are they going to sustain if there's a instant happen, how they are going to be resilience, so these kind of things we also look at. So I think there's something that we learn. We are keeping adding this kind of things in, or for the, when you look at the startup, when you start look at the business, when the business try to expand the territories from online to offline, offline to online. I think these kind of things, it's what I think as a start point from now on.
Okay. Thank you very much. I don't have any more questions, but I'm very happy for having this conversation with you. I think that it was very interesting for me, and also I think that for the audience it was also very insightful. Right now, then we will continue to the next section. Basically, Jonathan, that he just shared some insight with us. He's gonna share a bit more about his perspective about the company and about what's going on. Okay, so I leave this to you, Jonathan. Thank you guys for participating with us.
Thank you.
Yeah, thank you.
Yeah, thanks so much.
Thank you, Alfonso. Thank you, guys. So Jonathan, can I just check if you're in here? Just want to check with you. Do you have something to share?
Yes, I have a slide, so you can. I'm going to play from my laptop, right?
Okay, so I'm going to stop sharing now, and then I'll let you share your screen. Okay.
Thank you very much.
Okay, no worries. Yeah. So whilst we're setting up the dynamics, okay. So over to you, Jonathan. Cool. Okay.
Can you see my screen right now?
I can see your screen. Yeah.
Okay. Very good.
Yep. Can see your screen. Go ahead.
Yeah. Okay. So today, actually, thank you for having me. Actually, I would like to share a little bit our understanding about the investment in Southeast Asia and also about the COVID-19's impact for the region. So, so a little bit ourselves. We have 3 funding partners. Tony actually is working for Alibaba investment department before. Invest on Meituan and the UC Web when was in Alibaba. Jivis actually is the co-founder of the Oppo Indonesia business. Myself is actually previously working at Alibaba, and also co-founded a live streaming company in start 2016 to end of 2018. And we all together start doing all fun at the end of 2018, and also only invest on Southeast Asia. So far we invest on the one of the largest express company in South Asia called GMIC Express. It's mentioned that there is another China like 5 to 10 years ago. Actually, I would share some of our observations in here. So if you look at the GDP per capita, some of the countries like Indonesia, maybe 2000 equal to 10 years ago versus China. Some of them actually more developed than China, like Singapore and Malaysia. Some is very, very, let's say, similar to China, and now Thailand. But Thailand actually, the GDP per capita is usually there are some of them low down, but low estimates. And if you look at the population is like 10 years younger than China. China is right now 13.7, 13.8 years old. So whole South Asia is like the middle age is about 13 years old. So you understand that South Asia is young, growing faster, 5 to 6% a year, and also that very, let's say, very quickly to digitalization. We compare it to the South Asia with China is like 2010. You understand that the internet population is somehow similar, and the total valuation of the whole big companies, which is very similar to the top 3 BAT in China back to 10 years ago. And you will see that the money actually is putting into South Asia is about 10 billion, 12 billion a year right now. But of course, definitely it's going to be a huge downtrend at today, this year, right? And if you look at the penetrations for e-commerce, OTA, and e-payment, you understand that China right now at least is 37% e-commerce in total retail. In Indonesia, you can understand it's about 3 to 4%, something like that. But you understand that the percentage increasing actually is slower in that the e-commerce versus China, and as well as payment, because of that fundamentally South Asia's infrastructure still need to build, right? The physical infrastructure, digital infrastructure still need to be ready, more ready. In this case, that they can go in faster. That's why we understand that we compare e-commerce, maybe it's 10 years ago. Maybe if you compare the OTA, maybe it's 7 years ago. E-payments, maybe it's like 5 years ago. So you have to compare different. You understand the dynamics differently in South Asia. And we saw a lot of Chinese companies, big companies, giants. They are expanding their business in South Asia, and whether they are backing some of the vertical leaders, or they are actually joint venture, or they are doing by themselves, right? So you can see that the breakdowns, the TikTok actually has tens of millions, DAU in South Asia, and the Grab actually, and also the Tencent. Sorry, Tencent actually, they are investing in Gojek and also the the Shopee, right? So you can see all of these giants there, aligned together. So maybe similar to China, at some points, some of startups have to choose sides. If you this picture is borrowed from the North Ridge Partners. So you can understand that this is different verticals versus the companies IPO'd in China in terms of timeline. If you go back to the South Asia, so you can see the green part is this company reached their unicorn status, and you understand that there's a huge opportunities doing this online domain, right? This is online healthy, that the online booking, social chats, online video, fintech, and the e-commerce logistics. So those are actually opportunities. Right now, we saw some companies in here around 100 million, even less, like social commerce right now just start. But we're expecting more and more, unicorns will be coming from this domain. Okay. And by not just copying China used to do before. And we also have a lot of localized innovation. If you look at the we have a gold investment platforms in Indonesia. We have this agency network, which is people can top up or withdraw the money, or let's say remit the money via the agency. We have this donation services only related with the religion, the zakat donation. We also some of like a satellite to Wi-Fi box and to that mobile phone media services, which is never happened in China before. So that we understand that the entrepreneurs actually they're also doing their own innovations according to their each country's situation. But we should also look and understand that South Asia is a very complicated, different economic region. It's not entity. So the language, religions, and the infrastructure, and also the people's behavior are very different, each country. So one of the things we learned is that you should not trust in the data, actually, whatever you get from internet. You have to go in to see and try understand it by yourself. Just for instance, that if you see the Vietnam, okay, the GDP per capita is about $2,600. Indonesia, which is about $4,000. But if you really asking the people, after they graduated from university, after they started in their first job after high school, so you understand that in Ho Chi Minh City, the people's disposable income is higher than Indonesia's Jakarta. So you understand that in some way that Vietnamese GDP per capita actually is underestimated. Or you can see that Indonesia has a lot of rich people, which is mainly Indonesia Chinese. They are inflate the GDP. So and then that's why you have to really to interview the local people to understand how they live their lives, right? And also in South Asia actually is it's not a lot of countries, a lot of services you only can do in big cities, right? So that then you should consider that South Asia is not 10, 11 countries, but maybe like 10, 20 big cities, which is giving them much more higher disposable income and the level of education, which they can enjoy your services. But let's also represent it. There's huge opportunities. Who can crack the lower tier cities in that country can have a huge market, which is nobody right now can penetrate, right? So secondly is that the internet development logic is very different versus like in China. So in China that we first developer or e-commerce, then we're coming up with our e-payment system, then red hailing, right? And let's say so. But South Asia is different. South Asia is like everything happening at the same time. So the red hailing happening and same time is e-commerce. The e-commerce and the payments also happen at the same time. So you understand that actually who actually has more promising to do the wallet payment, it's the red hailing, is not e-commerce company, right? Which is a very different pattern if you compare China. Second is that we understand that because of a lack of infrastructure, some of like penetrations and the development we are not as fast as India and China, right? Because it was India actually doing a lot of innovations on like UPI and the government's like cash ban to speed up, whether intentionally or not, to a digitalization process. And there's also Geo actually bring a huge online people to the market, which is very unbelievable if it's going to happen in South Asia. And also that we see that that's very important that I think in doing South Asia is most importantly that it's not important if you are an online company or if you are a startup innovation company. The most important is that can you do a successful meaningful business in the long term? You can lose money, you can have your a trade-off at the beginning, but in the long term you must be really making a positive cash flow and EBITDA. So what we observe that if you're doing this e-commerce companies in doing online, you lose money, right? You do brand, you are doing a vertical. But if you're doing offline the UE is very positive. You make money if you're not really doing bad. So one of the things we think that it could be you start from offline, but having the technology, having the talent, and also the ideas in your mind, that one day you're going to do online, then it's possible you build up like offline to online company, right? Which is both strong on both domain, which is a very different as China 2 or 3 years ago. But right now, more and more people agree that all the business should be like end of day same, online, offline, both available. And we see that and we also one change that we understand that before we doing this company, we saw that something so internet plus something, right? So that we have the internet, we have a technology plus some business, whether it's education or that's grocery. That's one business model. But I think there's a possibility is that those players after this pandemic, they realize that they also can make money. They also can grow the business in online. So let's start to invest on technology. They are investing on their the online infrastructure. Try to build a business in both domain. And those people, we call it the industry plus internet, right? So this kind of business model, we think that maybe we're gonna happen in a few months and a few years in the future. And third thing, we think that in Southeast Asia is very different versus China, is that we saw different nationality and the background founders, Chinese from mainland, India, from the Singapore or from India, and also Western entrepreneurs. They all play an important roles in the whole ecosystem to fill the gap of the lack of enough talent in the entrepreneur domain. So we think that that's a pattern we can look at them. Firstly, that this kind of founders, we invest also over them, right? By the way, and we think that different backgrounds has a different minus and plus, right? So first we think that the team should have experiences. They have been doing similar business in the region before, understand the dynamic of the market. Second is that they should have a stable team which is believing in each other. If it's a tough time, people are can still stick together. Second, determination. Are they really willing to move into the market? Stay in the local country. Understand the dynamics, and also that the founders should have a comparable advantages, right? How they understanding about their products. For instance, that the India founders usually they can more easier to sourcing their technology platforms, developers and also the CTOs versus Indonesia founders, right? So that's why if there's something like a more heavily on technology, AI or SaaS, maybe India founders could have some of the advantages at the beginning. Chinese founders usually can leverage the supply chain in China. As a combination of the local co-founders to doing some like supply chain, e-commerce business, and Western founders actually are more familiar with how to do SEO and also that acquisition from Google and Facebook, and also very good at the financial services. So that's why we have to we can look at all different teams and to define what kind of let's say advantage they have on each kind of a different type of the business models. So after we talk about the, let's say, investment in Southeast Asia, and we also want to share a little bit about our opinion about the COVID-19. So if you look at the COVID-19, actually it started from China, the Wuhan, it should be December, right? November, December last year, and the first cases has been reported in US is the end of the January, Italians also at the end of January, as well as other in Southeast Asia countries end of January. But you can understand that in Indonesia actually it's the first one announced at March, right? So actually that's a month and a half differences. And if you look at the mortality rate in Indonesia, it's about almost 9%, and they are totally infected ratio inside the whole tested people, it's about 18%, almost 18%, which is giving us very understanding that the testing is not really in places, and the government seems like trying to push back, slow down how was looks like on the paper. So that's why why we should care about this one is showing that the governance of the country, and also that showing us that if we understand that China right now is resumed to the normal working schedule, maybe at May or June as a max, and I guess that the U.S. is coming back to work maybe at August, but Indonesia, as President Jokowi says, maybe it's going to end of the year. So that's why we should be very careful that if you really prepare your runway, you should understand that at least you need to prepare for 12 months to 18 months to be in the safe side, right? If you're in Indonesia, happen. So that's what giving us a sign. And also surprisingly that the two countries are doing very good. One is Vietnam and another Singapore, right? The Singapore is doing very good because that the mortality is very low. So the infrastructure is good, but the Vietnam is also surprisingly doing very good. They control very early decision, and the government has a very strong execution, right? Also almost lockdown, not like China, but it's also very strict in the region. So then we understand that if the Vietnam government try to do something, they also can do it, very faster and in a very efficient way. Okay. So what did we learn from our observation from the COVID outbreak? So if we look at of course, a lot of industry is getting huge impact, right? The retail, travel, hospitality, restaurants, and those we already know that. But what they do, right? And so we understand that the way to coping with challenge. For example, like Informa is a furniture offline, chain company in here. They are doing this live streaming shopping. They'll actually give you a private, video call with their salespeople. So they are help you to touring with their gallery and choose the furniture for you. Actually, it's more, it's a very interesting experiences. And also you can see that Indonesia also you can doing this gasoline delivery online. So you can order gasolines to your home. You don't need to go into the gas station, right? So every industry try to find their own way to deliver services. Definitely, we saw a lot of growth from this. Everyone we should know that education of online offices, online healthcare, gaming, and the e-commerce platforms. Right, we have I think everyone share our same understanding, but what I want to mention that I think e-commerce is going to right now what we see e-commerce in Indonesia is still with a small picking up, right? So some of the big sellers their volume is getting down because they are cannot getting enough supply right now before the pandemic, but we saw the overall the volume actually is picking up. So what I think that after this pandemic, more and more people get educated for how convenient if you can shopping online, then they were more and more highly possibility they were going to be shopping more online in the future. I think it's a very good stimulator for the e-commerce business in Indonesia. So when we talk about the impact on the investment side as a VC, I think we saw a lot of US dollar LP and also VC are very cautious. We also some of the term sheet has been issued, but they want to be postponed or they are withdrawn to their original countries. Unfortunately, we're seeing. Second is that we saw that most of VCs are focused on their portfolios rather than doing new deals. And some of the money is going to this bargaining hunting in South Asia, which they can find some of the good price, flat wrong, but the good fundamental business. We are also doing such right now, trying to understand which one is going to have a bounce back when things are let's say getting better. But what we are feeling that mostly agree that South Asia or bounce back will be like a U shape. It's not going to be V shape bounce back. looks like U.S. stock market as today. And we understand that some of the money, which is later stage, they actually are flow like a family offices and those kind of follower investors, LPs. They are investing to the U.S. In secondary market, which is trying to catch up as the momentum. And but we understand that there might be another 2 or 3 waves is going to adjustment, and also the shock wave is going to coming in the future, right? So when all these U.S. company, when all these big companies to revert their financial reports, so that's why I think we should be very, very cautious still, from now on to the end of this year. So who will get the funding, right? Because definitely there's some companies still fundraise if they are really need of money. I think some of the companies, when we look at the firstly, they are the market leader. Secondly, that if the market is going to bounce back, they're going to be the first one to acquire the market share. They are the first one to enlarge their competitors, right? And second is that this company is not really burn too much money on their marketing side, on their subsidizing side, right? They burn money on their technology platforms, products, and a few people. That actually is much more healthy. So I think this kind of company is very good advantage when they're going to raise money, close before the pandemic. For the long-term impact, I think that the beneficial industry we will talk about, right? Some of the positive benefits will be never come back, right? Education, e-commerce, and also I think the online gaming entertainment. They were doing much more faster, maybe 1 or 2 years ahead of their original schedule. For some of the industries like hospitality, traveling, and it's gonna be 2 or 3 years to recover, because people not only lose the time, they also lose the money to spend on their travel, right? And some of the industry we saw is gonna be go through a radically adjustment, and like fintech, right? So we saw that the OJK announced that there's a 900 million USD non-performing loan right now currently on the market, and it's going to be expecting even more in the next few months. So who actually can go through this crisis, and who actually can really control the risk? That's can prove in a really good team, right? I think for long-term opportunities, that I think we can invest on the some industries, especially actually the consumer behavior pattern started changing because of this pandemic and working at home state approach. And also we look at the how to some of the traditional business, or let's say offline business, which is extending their online branches, or really try to digitalization their operations, which may be also opportunities for the investors, right? And so overall, as a summary, I think our key takeaway is that we think that South Asia is still the most compelling and promising digital investment destinations after China and India. But still, there's a risk in here, because the region is highly connected, to the world, and whether there's a flu or there's earthquake, we will get a feeling in here. But historically, that the most countries demonstrate the ability to recover very quickly, which is a good sign for us. And so that's why when we start doing, I think still we're still investing at this special period, but we should keep eye on the history and global economic development, COVID-19 recovery time, especially US and China, to understand how fast South Asia is going to recover from the future, right? And also for the investors, actually, we were going to be more look at the working capital management, ability to earn the free cash, and just kind of more in the future, and I want to share with all the audience today, and hope to if you want to discuss anything, my contact the email chat, so you can reach me out there. Okay, Yulin, I think my presentation is finished. Hello.
Thank you, Jonathan. I think
you.
Yulin is on a call at the moment, but let me just introduce the next session. We're talking about, big businesses, super apps, unicorns, big companies, how they are responding to crisis. And to moderate the session, we have Alex, who is ER with Momentum Works at the moment, and he's based in Kuala Lumpur. Alex, over to you.
Hi guys, thank you for all of us joining and for all the panelists before us. I think we had a very good start, a lot of complementary discussions to, what we're going to be discussing now. I guess first off, what we could do is, introduce our panelists. Maybe each of you guys can give a brief introduction to yourself and your background, and maybe how some of your experiences might have related to maybe big companies or super apps. Maybe Jonathan can go first. John can go first.
Hey, Alex, sure. Let me just switch the video on. Hang on a sec. So,
no problem.
Hi, everybody. I'm John Russell. I'm Southeast Asia editor for The Ken. Hopefully you've heard of The Ken, but you might not have done. We're quite a new startup name in Southeast Asia. We're a subscription-based media company that publishes one story every day. We have a team of 5 people across Southeast Asia. Before this, I was with TechCrunch for 5 years, so I am coming at it from the media side of the angle, basically.
Okay, Professor Chan.
Hi, Alex. Thanks for your invitation and thanks for moderating these sessions. So I am a professor. My name is Guoli Chen. I'm a professor of the strategy at INSEAD. So my research is related to competitive strategy, innovation strategy, platform strategy, which is related to the super app, or sometimes we call it the ecosystem. And also I'm very interested and do the research on Chinese companies and how do they go overseas in Southeast Asia, and also how multinational companies get into China. So that is my research and teaching interest. Thanks.
Thank you. And Satyawan or Wawan?
Hi, everyone.
Yeah.
Sorry. Okay. Thanks, Alex, for moderating the sessions. My name is Setyawan, and right now I'm doing the fintech advisor in several startup companies. But previously, I was a director in OVO, handling the government relation and also risk management. And before that, I handled the risk management as well and compliance in Gojek. I think that should be enough for the quick introductory. Back to you, Alex.
Okay, great. So I think as everyone can see here, we have one from the media coverage. So hopefully he has a lot of details from researching and talking to sources. One from an academic perspective of actual strategy, which I hope we can get into later, and then actual insider information from 2 very large companies. We'd love to hear the insights and contrast against academic versus insider from one from internally and what they heard. But before we move forward, I'm not going to assume everyone has the same understanding of what a super app or a unicorn or big company is. So I guess maybe we could go into, from your different perspectives, what would you guys consider? What is a super app? What's the general definition? Maybe John, you could start.
I'm quite cynical about this because super app has become a really big term that everybody's doing, right? So anybody that's got any app that does 2 or more things is a super app, right? But I think in terms of this conversation, it pretty much boils down to ride-hailing apps, right? So guys that are offering from obviously like Uber style taxi services to sort of fintech services, food,
anything else that's on demand. So I personally don't really like the super app phrase, because I think it probably is valid in some cases, but it's overused by a bunch of companies who try and sort of play up what they're up to, I think.
Okay, maybe Professor Chen, would you agree with his definition, or is it maybe a little bit more broader?
So from the academic side, okay, so overall, this is the question about the business model, right? So historically, most of the traditional business, what we call is the vertical line of business, right? So for instance, if we want to manufacture this like cell phone, we have clear who is the supplier, who is the customers, and how can we materials we needed for the manufacturing process, and then we do this magic process and then sell our products to the downstream customers. So this is traditionally, we just call this the vertical line of business. And then the focus is of course to try how can we create value for the customers, and how can we reduce the cost structure, and then maybe push the pressure to the suppliers, so then the focal funds can get the profits. So this is the traditional one. And then because of digitalization, especially for these years, and then we see lots of like business model, we would call it the platform business. Platform type of business is different from the vertical line. It's like literally, it just create a platform. Like the earlier version of like Uber, right? We have the passengers who need the services. We have the private car drivers. So the platform itself, like Uber, just bring the potential supply and potential demand. So overall, it's just a platform, and I try to facilitate the transaction of the users in that platform. And then to me, I think super app it's a cumulative of the multiple platform in one mega platform. If we want to put the definition for what is the super app, or sometimes academically we just call the ecosystem. We do not use a super app. I mean, super app it's much more appealing for the readers of the media or the public domain. People talk about super apps. It's much more sexy, and perhaps it's much more appealing when you talk with the potential investors. But for us, I think it's more about the ecosystem, right? So if we use the more stringent definition of like ecosystem or super app, I mean, some of the cases of companies that you mentioned, like Uber, I'm not pretty sure this is the super app, or like including or Didi in China. Again, I don't think it's a good illustration of that is a super app. So the super app, I think some of the examples, which I think is much more closer to the definition that I think is the ecosystem, which includes like in China, for instance, like a WeChat, right? And or Alipay, right? So like WeChat, we can see there's a lot of services that the users can approach by using one single app. So the app itself facilitate a whole bunch of different parties and entities, provide all kinds of services in one single platform. So if we use that definition, actually not many companies or not many apps could be considered as a super app. Actually, it's very limited rather than people's common concept when you talk about like Airbnb or talk about Didi, many others. Actually, it's not the super app. So that is the way I think about the super app.
Okay. Well, would you like to? Yeah. Sorry, go ahead.
Yeah, I would totally agree with both John and Mr. Chen, because many people right now are talking about super apps. Well, practically what they do is they combine several use cases in their application, but then easily they mention it as a super app. However, the way I personally see super app is that it creates an ecosystem that a lot of use cases around that ecosystem can be used inside it. For example, like Gojek. Gojek, Grab, probably in Indonesia, there's a Tokopedia and some other application as well that has multiple use cases, starting from the ride-hailing, logistics, and then go into the food deliveries, and then a lot more in that, even including the payment system itself. So lot of players want to merge all of these use cases into a platform, an ecosystem, rather than creating separate application. For me, that's how I see a super app, where we can combine everything into one place. However, again, like Professor Chen mentioned, is that this super apps is actually created as a platform. So it hosted multiple platform inside it, multiple application perhaps, and it will serve as different serve different purposes for each of them. That's the way I see it.
Okay, great. Yeah, so I think that we hit on some good ideas, and I could tell that I think everyone generally agrees. Maybe for John, from his perspective, it's from a Southeast Asia perspective, where ride hail tends to be a super app, like Grab or Gojek. And I guess that begs the question, though, is this really a new phenomena? Is it really just a media-driven kind of thing? Has super apps existed before in the past, or is it just really this kind of coming together of mobile and this new technology coming together where it's kind of this new age thing? Maybe do super apps also exist in the West, or is it also just a Southeast Asia thing? So what do you guys think?
I'm not convinced they exist here, actually, to be honest with you. I'm a little bit skeptical. I mean, it's the pipe dream, right? I mean, everybody wants to have an app, as the professor said, like a WeChat style app where that is the internet for a user, right? Where most of the activities that they're doing on a daily basis are kept inside your app, right? That's the pipe dream. But I think it's exceptionally hard to do. And I mean, personally, I haven't seen an example of that happening in Southeast Asia yet. That's not to say that, I mean, I think a lot of the fundraising and the valuations and the big numbers that we see are in anticipation of that happening at some point, whether it's like Gojek in Indonesia or whether it's Grab. But to be positive about it, right? Because I want to be positive and not negative. It hasn't happened yet, I don't think.
Professor Chen, would you tend to agree that we don't have any currently, or in your opinion, do they exist now? Maybe where they came from?
So I think this is related to one of the big concepts in the strategy world. It's like, to what extent strategy, it's planned strategy or very intended strategy, or versus the other one is what we will call emergent strategy. So first, I think because of the digitalization and the wide penetration of the mobile users, at least it provides a possibility to have another super app in Southeast Asia. So the possibility is there. But whether it is well-planned strategy or emergent strategy, I think if we take a look of the historical development of the existing super app, I think in China, like for instance, Alipay will be one of them, WeChat will be one of them, and maybe more recently, the Meituan Dianping will be considered as one of another super app. And if we take a look at the historical developments of all these three companies, actually lots of business or services, when they keep on adding to their app, it may not be like well planned in advance. It's more about, for instance, right, when Alibaba have this like Taobao.com, which is the core e-commerce business, and then to facilitate the transaction of the potential buyers and users. And then they launched this Alipay as an escort account to make sure that, to try to build the trust between seller and the buyers. And similarly, if we take a look of the development of the Meituan Waimai or Meituan and Dianping, historically, it's more about food delivery. It's kind of another version of, so originally it's more about like Groupon idea, but then they're getting the food delivery, and then actually the food delivery business doesn't make money, or maybe the profit margin is very thin, if not making losses. And then they gradually get into the other line of the business, like the hotel booking, like ticket selling, etc., etc. And recently, they've been discussing to get into the power bank sharing, right? So, which means like if we take a look at the historical developments, they are not well planned. Actually, so a lot of things is more about emergent response to the consumer needs. So, which means that if we expect okay, if, you know, sometimes people think maybe Grab is already a super app, or maybe Gojek is already a super app. That's fine. People can debate whether it is or whether it is not. My point is that, okay, if we want to create another super app or like further strengthen the existing super app in Southeast Asia, it may not directly copy, replicate on the business model in China. So there's some copy or imitation, but at the end of the day, I think the good company need to understand the customer needs in Southeast Asia, and then perhaps launch some of the services which cater to the local customers rather than a direct copy of the Chinese model. So to me, I think it is possible. It take a couple of years, and also in the super app ecosystems, another critical phenomenon that we observed, it's like typically it's winners take all. That is the reason why, like in China, you know, big countries, lots of consumers only have this, to me, I think it's only 3 super apps, and they expect that the ecosystems are going to compete with each other, right? So back to Alex's original points, I think it has the potential in Southeast Asia. It's still evolving. I hope that the company in this region can, you know, develop some of their own distinctive business models. May not 100% the same as the existing super app in China. And personally, I believe that the phenomenon of the super app ecosystem is much more likely happens in the emerging markets like Southeast Asia, compared to the United States, because like the matured economy like United States, the market is already pretty good defined, and then it's harder to change the existing consumers' behavior. And versus in the Southeast Asia, because the younger generations, the new penetration of the mobile users, and at least to me, it provides a possibility. But let's wait and see whether like 2 years later, like for the 99% of people will agree, maybe Gojek or maybe Grab are going to be another super app, or in India, like Jio, right? So, yeah, that is my view.
Yeah, I think that's a good point. It brings up a good point about China and how it developed organically. And I think, you know, what we're seeing is, I think what John might be pointing to is that there's maybe a lot of copying. And there's a very big question mark of, will these companies develop into becoming a super app? And, you know, some people will argue that it's already there, or they believe it is. But, you know, I think we still have a long way to see if it will mature in the same way as China has. And then I guess the later discussions could be about, you know, about the strategy about doing that. Maybe Wawan, from your opinion, where do you think these apps came from? You know, how and why?
Well, actually, what you mentioned about the strategies is the thing that we need to look at when we want to see whether the super app phenomena, if we can say it, will be emerging in Southeast Asia, because John already mentioned, right? Like, a lot of super apps, like what people said, is gonna rise in Southeast Asia. People gonna try to include as many as use cases, as many of transactions as possible in their application. But then what's next? What are the objectives of these companies? Are they looking for transaction? Are they looking for user engagement in their applications? Because some other areas that we can look at is, rather than creating an ecosystem by itself, there's another path that we can look at, which is the collaborations. Some companies in Indonesia that start trying to go into that direction. Rather than going solo, creating a gigantic super app like Gojek, they try to collaborate each others, and then they try to combine forces into one platform, one shared platform. One example that we can look at is how Grab and Good Doctor is joining forces. So the Grab Health is supported by the Good Doctor. And then we can look at how OVO and Tokopedia join forces to create an e-commerce that has an online and offline payment capabilities. So it's no longer about one player's gonna rule and then gonna rise as a super app by themselves, but they can collaborate. They will try to embrace with any other players that share the same vision throughout the strategies. Especially if you look at this COVID situation, there will be new normals, right? The consumer behavior will change. Will the strategies, the current strategies that all of the super app players have, will it still be applicable in the next month or two? To be honest, I don't think so. Because in Indonesia, we can see that even like the tech giant, one of the tech giants in Indonesia, travel agencies is dying right now, right? So they lay off a lot of people. And that will be, I don't, to be honest, I don't think that's gonna be the end of it. More and more tech companies gonna face the same thing. So if we look at how the definition of super app, the combining all of the possible use cases into one application, in the end of the day, it is intended to embrace the customers on any aspect of their life so that they can go into this one platform and then do all of the things they need to do on a daily basis, be it looking for groceries, looking for healthcare that is critical right now, and then looking for food deliveries, which is, I don't know, probably there's some up and some downfalls on the groceries itself. But again, the strategies will need to change, and then we will need to see how each player is going to use that strategies on either creating a super app or, in my opinion, do a collaboration with a lot of startup players across Southeast Asia, across Asia, and then they create some common platform.
Can I have a quick comment on this one? Because I've been thinking this question for a long time. So like why, for instance, right, in the US, we rarely see this like super app concept or the big ecosystem. I mean, they have Amazon, they have Facebook, but the concept of like, you know, WeChat, like mega ecosystem, actually, we do not see it in the United States. So I think, to me, I think maybe that like three reasons. One, it's something I think it's relatively from the academic side, it looks like we understand a little bit better. Others, actually, we still think this is unsolved questions. First, I really appreciate your earlier comments. Actually, it doesn't have to be, you know, being a, you know, mega super app, and then so that you try to kill all the others and you will become the one. Like I said earlier, like in the US, more matures, and then so every division of the business already have someone occupied there, which is very different from the emerging markets, so that everything is new and then it creates the chance. So that part I think is relatively clear. The second, it's I'm not pretty sure whether this is like more about Chinese culture or like in the private sector, that the competition is so fierce that we see lots of cases that actually is a throat cutting competition, and then sometimes, you know, you know, people might use, like, sometimes it could be the or illegal, or maybe some action which is in the gray areas to do this, like the throat cutting competition, which is, I think, is on average, it's from the long-term perspective, it's not good or not healthy for the whole business ecosystem. Okay, so that part, I think, I mean, lack of research, but it's more about observation. The third one, I think that could partially explain why in the emerging market, we tend to see the super app. The reason is because in the emerging market and lack of these like well-established institution. So we see that on average, right? So like consumers, like in the emerging market, tend to believe or trust a big brand, right? So that's the reason why we see, like in the United States, we see the diversification discount, right? If a company do too many business, like the GE perhaps is the last conglomerates, and eventually people discuss it's going to there's some diversification and then to be more focused on certain core business, right? So in the emerging markets, because lack of trust, lack of institutional setup, and then people tend to need some companies like big name to build the trust, and which enable the possibility of the consumers to trust one specific platform, and then which is the snowball effects, right? So once you get the reputation, it's much easier for you to get into the other line of business and provide more services. And then from the platform business models perspective, it makes sense for them to keep on growing, because the platform or ecosystem, we tend to see the winners take all effects, unfortunately, because of the snowball effects. So that part could partially address like why in the emerging markets we see more, or the possibility of the super app. But fundamentally, I actually believe it doesn't have to be the one single dominant player, because if there's one single dominant players in one regional market, actually it may not serve the best interests of all the consumers and also the other suppliers, because this is the monopoly situation.
Yeah, some very good points. And I guess if I'm reading in between the lines, I think from what I'm hearing historically from China, it seemed to develop more organically. The US, when the technology was already there, everything was already kind of walled off and built up, so that we don't kind of see that theme of a super app. And I guess then for Southeast Asia, what it sounds like is because China developed organically, what we're seeing is that it's more purposeful. And I guess what John is alluding to is that they're not there yet. He doesn't believe they're there, but I think people are more trying to purposely kind of build into it. And I think, Wawan talked about some strategies of how they want to go about building that. It's kind of like having a blueprint from China in a sense. So I guess that kind of brings us to the next topic of, before the COVID crisis hit, what were the strategies that these companies were building? And maybe before we could talk about the strategies, what do you guys think? Who do you think is maybe a potential super app, or is already a super app?
In my opinion, we can see from the Indonesian market how the Gojek ecosystem evolved from only ride-hailing into like multiple use cases inside it. And in my opinion, I think both Gojek and Grab in Indonesia has already become, to some extent, as a super app. They can serve people's use cases on a daily basis. But again, right, like Professor Chen mentioned about the competition too fierce, it is true, because especially in Southeast Asia and laser focusing on Indonesia, people are super price sensitive. So even like less than 1,000 rupiah, probably around 10 cents, 10 Singapore cents, people gonna change their perspective. People gonna change their selection. For example, if suddenly Gojek get a discount slightly like 1,000 rupiah more than Grab, people gonna churn from Grab and they just use Gojek. And that's also happened in the e-commerce side. All of the marketplaces are facing the same thing. People opening up stores in each and every marketplace because they're gonna look who's burning more money. Because they're gonna sell on the same price, but customer gonna pay less, and then they get more sales, right? But that can't happen now. People are keeping their war chest right now because it's gonna be a long run. So again, looking into the strategy, previously, Gojek, Grab, Tokopedia, and then we can see how Bukalapak and some other players are trying to embrace all of the use cases into their application, becoming a super app. Because they want to rule, they want to become number one or number two. Because it's either number one and two, or you becoming nothing at all. That's the perception before this. But then, since the situation changed, we need to be really cost conscious about everything. So it's either we want to expand the business and do the trial and error, try to incorporate one more use case, another use case into the application without proper thinking, or we can try to look into the market, people that can share the common strategies, that people can create a strategic partnership, and collaborate with it. So each and every players can focus on their use cases, be excel about it, and then try to minimize the burning rate. But again, it can serve the people's purpose. In the end of the day, it's not about, if you look about this startup, the fintech, the strategies is always about how we can serve the customer better. At some point, in my personal opinion, serving the customer better doesn't mean that we serve them for all of their needs, but we can direct them into our priorities, into our partners, right? So we can still get the spread out of it. That's my opinion.
Great. So I heard a few names. I guess you're considering Gojek and Grab, Bulapack and Tokopedia. Would you guys say there's any other potential or already existing super apps in the region? Professor Chen or John?
I mean, if you look at what could be a super app, right? It's really any app that you're using on a daily basis. So you could potentially argue that Facebook could have a super app in Southeast Asia, even though it hasn't done anything, right? And there's been lots of rumors about Facebook adding payments to a WhatsApp, right? Obviously in India, they just did an absolutely huge deal to create what they're calling a super app again. But I mean, it's still early days, and Facebook could do something here eventually. So I think for me, I mean, one thing I've noticed is in China, the super app phenomenon came after the app was super, right? So the app has people using it every day, and then it makes sense from there to add other services. What's happening here is apps are adding other services to get users in, and I think that's a strategy that's not the same. So you're building yourself up as a super app to get users, whereas the true super app case is the other way around, right? Which is having users first and then serving them afterwards. But I think it was a good time to be a startup, because I think there was, from what I've heard, there's a lot of companies that sort of Gojek and Grab were keen to either invest in or to sort of buy. And investors, I think if you were going to pitch investors and sort of Gojek and Grab were in your area, you know, whatever it is that you were doing as a service, I think that also stood to reason that you were doing something important. So I think as founders prior to the COVID outbreak, I think the super app phenomenon was actually a good thing in Southeast Asia. And as to what happens next, I think it's anyone's guess. I think Grab just recently put out a note saying that, you know, it's obviously the biggest crisis they've ever had in their history as an 8-year company. You know, Anthony Tan, as CEO, is always very bullish to the point where you think, can he really believe what the things that he's saying? But on this occasion, he said that he's very concerned and that there'll be sort of cost cutting happening at Grab, which is, to my knowledge, the first time we've ever heard that. So I think it's still early days, and you read things about the numbers that they've got going down, like very, very high drops. I'd imagine like 50% plus from certain countries and certain verticals, right? So I think it's still too early to know what's gonna take place. But it's certainly notable that, yeah, the Grab for the first time has come out and said that, you know, this is going to be a really tough period.
Professor Chen?
Yeah, so like John mentioned this, like WhatsApp, right? So broadly speaking, I think in this region overall, there's two possibility points. Of course, it's like American companies like Facebook or WhatsApp. The other one is more about the local players like Grab, right? And if we take a look, the fundamental elements of the super app, and eventually it needs like a mega base of the potential users. So which means perhaps in Southeast Asia, every one single country, maybe perhaps Indonesia will be the outlier. Otherwise, like Southeast, I mean, India or Indonesia could be the outlier. The single market, it's big enough, just like in China. But all the other countries in the South Asia, the single country itself is not big enough to support the concept of super app. So from that perspective, maybe the local players like Grab tend to have a bigger chance, at least like as it looks like right now, compared to other players, I think it's better in terms of getting the different countries in this region. But fundamentally, right, so if we go back to this, what is a business, right? Satya mentioned about to serve the customers better, and think about the fundamental of the business, and also it's about how to make money, right? It's not only always how to burn the money. It's much easier to burn the money rather than to make up money, right? So for the super app, I think one of the, or any platform business, okay, if I use the more platform rather than the super app or ecosystem, any platform business, actually, there's several critical questions that we have to think about it, right? What's the potential network effects? What's the potential effects of the winner take all, the possibility? What's the parameters that determine the winner take all? The other most critical question to me, I think, it's about the value creation versus value capturing. Okay, so we see that nowadays, because of digitalization, lots of apps create lots of value for the customers. It's true, they serve their customers very well. They create value for the customers. But where is the money side? Okay, you can subsidize by using or use the money from the VC, from the angel investors, from the IPO. You burn the money, it's easier. But where's the money side, right? So how can we capture the value from the super app? Actually, that is, I think, it's not only the question for the Grab and also for many, many other companies by using these ecosystems. And like I said earlier, if we take a look at historical development in China, actually the money side, or how to capture the value, actually it's kind of organic growth. It's like when WeChat or maybe like Ali, when they design this whole system, actually at the beginning, they're not very clear where they can make money. Okay, so eventually, like in Southeast Asia, we get some experience from the US, get some experience from China. But again, what are the unique elements that we can create in this region? And eventually, if you want to create a super app, I think there's several fundamental things that people should consider. One is like, how can you make, how can you get a big base of the loyal customers? Although the super app can provide all kinds of services, but eventually there will be one or two core services that make your platform very sticky compared to others. Okay, if you do not have one or two core business that can make your consumer to stick in the platform, and eventually it's very difficult for any platform to make money. So core business is very important. Second, it's maybe I think any super app perhaps needs financial payments, this kind of services, which is the infrastructure could be built into the super app. Otherwise, it's more about business activities. It's very difficult to use my earlier words to create this stickiness, and how can we use the infrastructure to get deep penetration of all kinds of business activities. So eventually, I think the question, especially in this post-COVID-19, it's not about like how can we burn the money. It's not where can we strengthen our core competitive advantage, one or two services which can create the stickiness of the users. The second is how can we capture the value in addition to just create the value. That will be the core question in the post-COVID-19.
Yeah, so it sounds like, you know, pre-COVID, from what I'm hearing is that a lot of these super apps were fundraising huge amounts of money to acquire their user base. And now it was sooner or later, I guess, where there's time of reckoning where you have to start making money, like the professor is alluding to. But I guess before COVID hit, what were some of those specific strategies? And maybe Wawan can describe what he saw in Gojek and maybe on Ovo. So what was the competition doing? And then I guess later on we can contrast that to, you know, post-COVID, what's happening now?
Okay, well, if we look at the competition, regardless about the competitions, right? The value creation and value capture, as mentioned by Professor Chan, is really interesting concept, because again, if we look into the condition right now, even in Gojek and Grab as the ride-hailing applications, the riders, they have a certain amount of money they want to accept regardless the distance. But looking into the customer, they just want to pay as you go, right? If I want to travel only a short distance, then why should I be charged on a minimum? They have to be a minimum charge of it. So there are some incentive given on to start with. And then there's a lot of incentive given to drivers, to merchants, to business partners to combine forces and to create this ecosystems, right? So that creates a problem, and that creates the challenge when we're talking about the competition itself, because both Grab and Gojek also facing the same thing. Right now, it's always neck to neck in terms of price. If the price difference changes a bit, even a tiny bit, like for example, 1,000, or even make it slightly bigger, 2,000 rupiah, and the swing is huge. We can see one time Gojek have the 70% of the market share for the ride hailing, but any other time it's changed into like 30-70 for Grab. It changed into like 70% for Grab because of the price reduction, and it always goes on and on, always like this. Whenever Gojek creates a new platform inside it, go into the food deliveries, and then right now go into the e-health, Grab is also doing the same thing. Pretty much everyone is creating the same thing with the different flavors. But in the end of the day, it's always going back into the costing in the end of the day. To be a platform, to be a to fight all of this cost, all of this incentive that they need to expand in the first place. We look at if you look at Gojek, they have GoPay as well. The e-money side, the payment side, burning a lot of money. All of the payment side burning money. We look at Grab, we look at OVO. The cashback is also the same thing. All of the e-money players in Indonesia facing the same thing. And then all of the e-money going into this super app function, going into this ecosystem. Minus plus all of the minuses from the business become the interesting competition, because everyone is running on minus. Everyone is relying on additional source of fund the next round. Everyone is eyeing on the sustainability, on the profitability. But how to do it if they always try to incorporate everything into one gigantic package? It's tough for a startup, for a digital players to do it, because the nature of the company itself is agile. And for me, I saw companies, a big corporation into a small startup, into a small fintech. The nature is totally different. If we go into a big company, loss of $100,000, we can yell around. We can just screaming around saying that, okay, we have a big loss. But in fintech, in this super app era, loss of $1 million, suddenly we just say that, okay, let's assess our next steps. Okay, should we continue do this, or should we pivot to other stuff? So it's totally different the way I see it. Although the competition, it's always going to be it's always about the pricing in Indonesia.
So very good points. So it sounds like pre-COVID, the money used and raised was to basically incentivize users and discounted, which led to price wars and And essentially what you're saying, this is a big facet of what we're seeing. So I guess that leads to the next question. What do you think what is happening now? What are the super apps doing? Are they still deploying the same strategies of discounting, opening new verticals, reducing price, getting market share, or has that changed yet? Or what do you guys see?
Well, if I can start answering this question, at least in Indonesia, the place where I really familiar with is that even these big players are starting to collaborate. Like me, from the OVO days, we always try to collaborate with Grab, with Tokopedia, and then collaborate. Right now, Grab is collaborating with the Good Doctors. So it's more on the try to reduce the cost, try to reduce the expense, and try to reduce the expansion, while trying to deepen the potential source of income from monetizing the customers, monetizing the services that we already have. While at the same time, they need to also focus on try to look for an addition or another way to incentivize both the both the supplier and the customer side on how they can attract these parts into the to engage with their platform. That's going to be the challenging part.
Just some quick comments. So to me, I think the competition is right now, right? Most of the apps actually it's funded by capital. Okay, so the capital could be from various resources, right? VC or IPOs, and then so eventually, I think in the post-COVID-19 cases, and then the VCs are much more cautious to funding not only the super app, but many business activities. So eventually, I think the cash burning rate, my guess, it won't be like similar to the pre-COVID-19 situation. The second is go back to the earlier comments, right? So like for instance, Gojek and Grab, fundamentally, I think the original business, which is the ride-hailing business, it's not so sticky compared to other business. Like when we think about the WeChat at the beginning, it's about social networking. In general, it's much more sticky because all your friends is in that WeChat, and then you are sort of forced to use the WeChat. It's not your choice, literally. And e-commerce of like the Alibabas, eventually, the stickiness of like, because like once you submit your bank account to the e-commerce, you buy stuff there. So eventually, it's actually the business transaction is much more complicated and it's sticky compared with like ride-hailing business. Like in China, it's like Didi, right? Gojek and Grab is the same, right? So back to around like 2016, when I wrote the case, at that point of time, Didi and Uber are still fight fiercely in China. I think, okay, if compare the business fundamental, it's very easy for one to copy the other. No matter how smart you are, eventually 1 month later or 2 weeks later, they're going to launch a similar business. So under that situation, actually, it's very difficult for the company to build the unique competitive advantage and make the user sticky to your platform versus the other. So based on that judgment, actually we can expect that Didi and Uber will merge at some point. And this is the same happens in China. It happens in Southeast Asia when Grab merged with Uber. And possibly, I mean, from the business logic, right, if they cannot find some value capturing side, if they cannot find the sophisticated or complicated business transaction, which make the user to stick to the platform, eventually maybe Grab and Gojek at some point of time, if we call the Chinese called cash daddy, right? If which is the or sugar daddy or whatever you call it, if the capital from the capital side that eventually nobody can really sustain the big cash burning process, and then so we might see another merge at some point of time. So post COVID-19, I think fundamental reason it's the the cash. It's like to what extent that you can still sustain the current business model if you cannot find some good way about the value capturing. Yeah, that is my thoughts.
John, would you like to add anything to that?
Yeah, sure. So I don't personally know what's going on at Grab or Gojek. I'd love to know. So if there's anybody out there who knows, please contact me. Discretion is obviously guaranteed. But what I do know is that since the end of last year, right, you know, SoftBank is a very key investor in Grab, and obviously the WeWork disaster had refocused every company in the SoftBank portfolio on being more cautious with the burn rates, right? So I think even before the COVID outbreak, Grab had been wary that they needed to cut the burn rate, and I guess by association, you know, Gojek too. And obviously they both just raised huge amounts of funding. I think I've read somewhere, I think that Grab has about $5 billion in the bank. Gojek just closed off a round that I think is over $2 billion in the last couple of months. So obviously they have the runway, but I think, as I mentioned, to have the Grab CEO going out there and being, for him, like quite candid about how tough the situation is, I think you can read a lot into that. That behind the scenes, Grab is definitely trying to cut that burn rate. And as you said, Professor, there's been media reports about the potential tie-up, like a potential merger deal between those two companies. I don't have any in what's already out there, but I do think that it's quite hard, and that there's oftentimes companies do meet with each other privately. You don't always read about that in the press because we don't always know. So it's hard to know whether that is a meeting that is of substance or just a meeting anyway. And obviously it makes sense in some ways for there to be some kind of consolidation deal, but I think there's lots of egos and lots of opposition in terms of like how each company's ecosystem has grown up, right? As we said earlier, like they've all copied each other. They've got their health companies that they've invested in or that they've acquired. They've also bought fintech businesses. They've matched, you know, each other like for like in various verticals. So perhaps doing some kind of merger deal makes sense on paper, but it's quite hard to figure out how that would look. But yeah, I think we'll find out in the next couple of months from Grab and Gojek. I think the fact that Anthony Tan's letter was like a week ago means that it's still very early. So I think the full extent of how Grab and Gojek are cutting back on their spending will become evident soon.
Okay, great. So I guess this brings us to the last topic. You know, I think Wawan was talking about how, you know, the super app companies probably need to look deeper into each of their users and extract more value. Professor mentioned, you know, they need to really sharpen up their, you know, what is their actual value capture to really make it even more sticky. So what you know, I guess the last question would be about what would you guys, you know, advise for these super app companies if you were to, you know, work for them, or say you were at the top, but what should they be doing at this moment in time? And, you know, I guess post-COVID, there are some lasting effects. So I guess you guys could talk about, you know, what are those effects and what they should be doing.
In my opinion, first of all, we need to look into what is the new normals going to be looks like, because although there's a lot of write-ups about this new normal, but it's going to be different from country to country, from area to area, right? And as part of the super app that goes to serve customers and also to ensure that the business itself is sustainable, they need to really understand what is the new normal going to look like and how it will impact each and every companies that they have. And then after that, in my opinion, again, another way of creating this new super app, creating a big ecosystem. You don't need to work yourself. There's a lot of potential collaborators that are waiting for to be asked by you to partner, right? As long as we can look into the value creation that we can create, and then we need to ensure that we can get revenues out of it. It's not like always burning money. It's not like we need to capture at least 70% of the market before we can gain profit. But it's more on the cost conscious, and then try to focus on what we can do compared to the new normal post-COVID, which I think it is too early to tell. There will be a lot of changes along the way. So right now it's more on the wait and see, and I try to maintain the war chest feels.
Okay. Professor, any advice?
I think the earlier comments is very interesting, because eventually, if we think about the turn of the ecosystem or partnership, right? So actually, in the platform, the original purpose is to try to encourage partnership in the ecosystem, which is directly opposite to the competition itself, right? If you take a look at the strategy in 1980s, right? So the Michael Porter said, okay, what is the competitive strategy? So how to compete and how to squeeze your supplier, how to squeeze your customer so that you capture the money, right? So that is like 1980s, 1990s, and then competitive strategy. And nowadays, actually, people care much more about the potential collaboration, the partnerships, the way that we call it ecosystem. I think the original term actually about the ecosystems that we can imagine, like in the ecosystems, there are lots of players that they can thrive, they can blossom in that ecosystem, rather than the cutting throats of competition. So I think it's like, I totally agree. That's actually, we need to think about not only about the platform-based, also the potential collaborations, how to enable all the entities in these ecosystems to thrive and blossom, right? It's fundamental. And use the platform strategy fundamentally. I think some of the points that I highlight before, I think still valid in the post-COVID-19 situation. Number one, it's where is the value capturing. Okay, eventually your investors will care about where is the value capturing. It's not only about the value creation. So eventually you have to think harder, where is the money side, rather than just burning the cash. And also post-COVID-19 situation, then the resources, including the cash, is going to be more limited. We can see perhaps in the next 6 months or maybe within a year. So how to manage the cash flow, how to be more careful in terms of spend the money. And to me, I think it's always very important to strengthen the core advantage, right? Go back to this, like the platform or the ecosystem. Eventually, there's just one or two core business that you can grow your customers in terms of numbers, and also you can serve them better so that you can increase the stickiness of your ecosystem. Otherwise, another 10 cents of the lower price in other platform, and then I can easily switch to the other platform, and then I just call the motorcycle or cab. That eventually will not create, it's create value for the consumers, okay, but it's very difficult for the company to keep on sustaining burning the cash for 5 years or 10 years. That's my view.
John, you have any advice for these companies?
Well, I would never tell any of these companies how to run their business, right? I'm not a business person, I'm a reporter. But what I do know is, what I would say though is broadly, the impact that these companies have had on Southeast Asia has been huge. And one of my colleagues in Indonesia, she recently wrote a story looking at the sort of upskilling of people in this gig economy kind of period. And we found interesting things, that there are people who were running their own businesses. I think one was a photographer, and he quit his business because he wanted to ride for Gojek, and it made financial sense for him to do it. He could work the hours that he wanted to work. And there's these stories across Southeast Asia for Grab and for Gojek. And both companies have spoken about the social impact that they've had on the region. They've made claims about sort of the GDP growth that they think they've enabled. And so I think that it's incumbent upon them to make sure that their business is not going to die overnight, and that they can survive COVID, and they can exist for the folks that basically do the work, right? The ones that go out there, and especially now the ones who are out there risking infection and doing the things that we do, so we can get our meals and we can get trips. And so I mean, I know they're taking this very seriously, but I would obviously hope that they find the right systems to ensure that these people continue to make the money that they need to make from these platforms, so that they can put food on their tables too.
Thank you for your insights. So I think it's a very good summation. You know, these super app companies have brought a lot of value to the region. I think that, you know, hopefully they can continue to provide the value. You know, a few question marks, maybe sharpening up to see where these companies will land. But overall, I think a very good discussion. So thank you for the panelists. And I pass it back to Yorlin or Jangan. Thanks, guys.
Thank you,
Thank you,
Alex.
Alex.
Thank you, Momentum Work, for organizing this. Thank you.
Thank you, everybody. Thank you. It's really, really interesting. Okay. So moving on. I think this is going to be our. So Jangan, your ventilator, we can just move it to the Easter egg, yeah?
Okay.
Okay, cool. So this is the last and final panel of the evening. So can I invite Blake, Andy, Juliet, Vaibhav to come on board?
Hello, this is Vaibhav from
Hi.
Monsanto.
Hi, Vaibhav.
Hi, everyone.
Hello, everyone. This is Andy. Nice to talk to you.
Hi, Andy.
Hi, I'm Juliet.
Hi, Juliet. Oh, I love your backdrop. Is this at home?
Yeah, let's say it is.
Okay. That's so cool. Okay. And Blake is there as well. On mute. Yeah. Okay. So I think so basically the last panel usually is the most interesting and the most challenging panel, because we have to close on a bang, right? And you guys have actually have so many smart people in front of you, sharing their thoughts and taking away all your good points to talk about. So this panel will be very, very interesting. So and I think Professor Chen and Ken has already set the stage. Hey, Blake. Hey, has already set the stage. I think they mentioned a very good point for growth companies, like how do you not die overnight? How do you conserve cash? What is the value generated? So I think before we move on, right? So the agenda for this panel is priorities for growth companies, and based on that, let's kickstart this panel. Bearing in mind what Professor Chen, Ken, and the previous panel has actually shared. Yeah. So let's do it. So as a start, could I get all of you to give a short presentation, but short 1 minute introduction about your company? What are you most proud of your company? And then what were you doing before COVID-19 hit? So very quickly, maybe starting with Blake, since you're the first one in the PowerPoint.
Sure. Thanks for having me. So Lala Move is a crowdsourced intra-city delivery platform. We started in Hong Kong in 2013. We now cover more than 300 cities across China, Southeast Asia, India, and now Latin America. So I think the thing that I'm most proud of is that we actually tackled China and Southeast Asia relatively successfully at the same time, which is a pretty unique story in and of itself. And then I guess pre-COVID-19, we were dealing with the pre-CNY delivery rush. And so that's where we were before this all started. And yeah, I guess it's still what we're doing.
Okay. Okay, funny. Okay, Andy, how about you?
Hello, everyone. My name is Andy, the CEO of Silog. Silog based in Singapore, providing AI decision engine for banks. So we aim to bridging the gap between SME and financial institutions. Our presence in Singapore, China, and also our main market is Indonesia and Thailand, and also Japan. So for the things I'm most proud of, there are three. Firstly, I think with our technology, so we can see our clients using our product to really accelerate their processing make the banks more efficiency, and before using us and after using us, we can see the difference. And secondly, I think our team is fast learning, and we keep improving ourselves. And yeah, this is really important to a growth company. And then the third thing is, I think I'm quite happy we miss a lot of opportunities. For example, like ICO or maybe a cash loan. So those are the opportunities can easily put us into crisis. And it's not a negative comment for those business models, but I think it's not really suitable for us. So meaning in short, it's like we are able to say no to a lot of opportunities. This is really hard for a startup, I think.
Okay, so hang on to the point. I'll come back to that later. Juliet, how about you?
Hi everyone, Juliet, I'm CFO of Carsem. Carsem is a transaction platform for used cars. We operate in Malaysia, Indonesia, Thailand, and Singapore. We currently transact about 4,000 cars a month. So interesting, Andy said that the kind of not to be opportunistic. I think one thing I used to greatly admire about Carsem before I joined, oh, by the way, I recently joined a company, a VC turned operator. So it's a really interesting time to be an operator. Yeah, so it's one of the companies in my VC days that never pivoted. I think it's I think it's the insistence on value creation in a market that desperately needs some basic infrastructures. And it takes a lot of groundwork to build. And I think I really admire that quality in the company. And to each their own. I think some people might criticize it as being less opportunistic. But this is actually one thing I'm quite proud of.
Okay, and then Vaibhav.
Hi. Enchanto, it's a Singapore headquarter enterprise SaaS platform company. What we do is we provide a software platform for logistics companies to run their fulfillment operations, and to brands, retailers, and sellers, a platform to sell on multiple channels, marketplaces like Lazada, or Shopee, or their web store builders on, like, for example, website built on Magento or Shopify. What we are proud of, we were actually a logistics company, right? And we did a very successful pivot in 2017, almost resetted the whole company from zero revenue, zero orders on our platform. And today where we are is, last year our users did almost 48 million orders processed using our software across 14 countries, on an average on 1 million order per week. And most importantly is we tested the profitability first time in history of Enchanto. So been profitable for the last 4 months, which was a big achievement for us to reach with very limited funding. So yeah, that's about Enchanto.
Okay, cool. Okay, so then on that point, right, Vaibhav, I'm just going to go for you for the next question. So how has the events in 2020 impacted your company? So I've heard from everybody since this morning, there's always the pros and cons, and there's always opportunity. And I presume your company has actually benefited from the fact that most people are going towards e-commerce. But would that be would that be right? What's the realistic landscape for your company right now?
So yes and no, right? So are we benefited? I don't think so, no. At least in an immediate term. So what has happened, this still feels like a sci-fi movie, right? So nobody told us about this thing coming, and we'll be locked in our houses like this. It was unimaginable. It has impacted us negatively in terms of immediate new sales. So we are a B2B company. We have to go and meet our customers to do sales. We can't B2B core system contracts online, right, yet. So in terms of new revenue, we see that there is an impact for sure. Existing customers wise, so far, if you look at the month-on-month growth, right? So March 2020 orders as compared to March 2019, we see 17% growth in terms of orders. Essential categories. We see essential categories are growing. Sometimes certain weeks they grow like 68%, maximum that we recorded very recently. But e-commerce, there are a lot of non-essential categories. And in many countries in the region, like in Singapore, you can ship everything. You can ship essential and non-essential. But most of the countries in the region, you can't ship non-essential, right? And also, people have started not to shop the things for example, fashion or cosmetics, or like small spends like $5 spend buying a random USB connector. People aren't buying that anymore, right? So we see certain categories. In fact, there are a large number of categories has dropped. In e-commerce, generally, fashion, cosmetics, and electronics are the biggest categories. So we see impact definitely that not able to sell immediately to new customers, existing customer, non-essential category customers. They have negatively impacted, and we've got to help them somehow. We don't know when this will open. On the positive side, what has happened is that people have realized the importance of e-commerce now. So we see more inquiries right now that people are thinking about it, businesses are thinking about it, CIOs are thinking about it. But again, it's thinking. We'll see how actually they deploy resources once the market opens.
Okay. Juliet, how about Karsam? What has happened since 2 months ago?
A lot. Yeah, I think immediate shock would include, I think, operational shock, because I think the priority is to make sure our employees are safe, be it with our other team members or with the customers. So procurement, the PPE, I know it's really boring, but it took me quite a bit of time to source that out. And immediately the management came together to form a employee COVID support fund to help employees in countries where testing is not free. It's actually quite expensive. And for any medical expenses that's not covered by insurance, and a lot of them don't cover. So we've done that quite rapidly. And we've streamlined and moved online our operations and team meetings as much as we could. We had our first ever virtual town hall as a regional company. I think that's a kind of a silver lining in all of this. We did get better at working remotely with each other as a regional company, which used to be quite a bit of challenge. I think in the midterm, we're seeing some behavioral changes we're quite excited about. And I think echoing what Jonathan mentioned earlier, because the peak happened about a month and a half earlier in China compared to us. We're seeing the response, the recovery of the market like a crystal ball. So we're kind of reading a lot of behavioral changes, especially in our sector. And we are actually getting feelers out into the market and gathering some useful data about the change of behavior from both dealers as well as customers. So that's really interesting.
Okay. Andy, how about for Silot?
Firstly, we can't travel, so especially for financial institutions, if they don't meet you face to face, they won't buy anything from you. And secondly, even we make the sales and we couldn't deploy, and a lot of like modeling has to be on premise. So as the result, the sales volume definitely reduced a lot, and our team member couldn't travel, so we couldn't meet to each other, and it sounds like super terrible, but actually not. I think overall, I think it's 50-50. Another way there's a picture spread in net about, I think, several weeks ago. The question is, who make the digitalization innovation? The answer A is CEO, answer B is CEO, answer C is COVID-19. So actually COVID-19 pushed a lot of financial institutions to make the move. And the more and more financial institutions, they understand trying to reduce the human touch, especially to reduce the cost, closing some branches and make all the onboarding applications to online. And this is more and more acceptable by the client. So we start to pull back all the team members and also focus to, we call a word as building the value for the company. So we're trying to pivot from hybrid solutions to a purely SaaS model on cloud basis. So it's really hard to convince the financial institution to adopt the cloud-based solutions. But nowadays, even they are not working, so they don't enter to their server rooms. Their data has to make some change, and then they get some results. So in another way, we definitely beneficial from this crisis, and also we launched some apps into market, and with people, especially the business owners, stay at home, the organic growth increased rapidly. So I think it's 50-50 impact to us.
50-50, okay. And finally, Blake.
Yeah, I think
how's Lala been?
Yeah, it's been interesting because we've been able to because of our geographic coverage, we've learned something at each stage as it's gone east to west. Fortunately or unfortunately, we've got 270 plus cities in mainland China under our Holala brand, right? Unfortunately, you get to deal with the problem in the biggest market first. The good side of that, though, is right after Chinese New Year, when it's the slow time of this year anyway. So from a revenue standpoint, I mean, when everything got locked down, we lost over 90%.
Wow. Okay.
The good side, though, is in over 85% of our markets, we're actually now back above our pre-CNY levels. So I feel pretty fortunate that we've been able to recover, but consequently, we've also seen the impact as it's moved down to Southeast Asia, the virus kind of following China, then to India, then to South America. And for us, because it's very local delivery, we don't do any international or cross-border. We have to adapt a lot to the government policy, and depending on the sophistication and/or kind of how the wind blows, that can change in a city or in a country on a daily basis. So India is basically still on almost lockdown right now, but there are certain markets that for us are growing. We're up 400% since January. So Latin, Malaysia, and Philippines, Singapore even. So for us, it's very much a mixed bag. But in the long term, we're very, very bullish because as our primary customers are SMEs, this is forcing them to think about being flexible. The only thing that when you can't talk to people or see them in person, that can kind of bridge that gap is technology. And so as people try to, reduce their operating expenses, they look for technology-driven logistic partners to kind of fill that gap. And, we're well positioned to help them kind of weather the storm as well as grow into the future. So actually, I think in the long term, it'll really speed up an adoption in our industry of the acceptance of the model.
Yeah, and I think just now a previous panelist was saying that this COVID virus is actually quite good for investors because it kills off the weaker companies, and the companies that survive would be the strong ones, right? So I just wanted, and I just wanted to understand from you, all four of you, right? Starting from Blake now, what kind of strategies have you taken to defend against this kind of volatility, and how have you position yourself to be agile, to be good or bad, be able to deal with what comes your way as a company?
Yeah, it's probably pretty cliche, but actually your DNA before the crisis will probably carry you through the crisis. So it's pretty hard to shift who you are as a company, especially from your values and how you operate, just because of a pandemic. So for us, we're kind of like the tortoise as opposed to the hare. And so we've always been really prudent, very financially conservative, very pragmatic, and understand that we're in the long game. So we went into this in a very, very strong financial position. We're coming out of it in a stronger financial position, and those are not things that just change overnight. So I think the DNA of your company is what really sets you up in this type of circumstance. That being said, operationally, you do have to adjust things. We really, pride ourselves on our contact with the drivers, personalized training for all of our drivers. Well, we've gone to all virtual training now. So there are operational things day to day. How you educate the market, how you spend your marketing dollars changes, but actually the core foundations of what made your company strong or weak before a crisis, it's very hard to change in a crisis. So I think this is really what carries companies through times like this.
Okay, and then jumping to Juliet, would you have anything? Would you have anything to say to that? I see you nodding your head. Yeah.
Yeah, because a lot of what Blake said is very much what I have in mind. I think staying true to your value and staying true to the fundamentals that got you to where you are is definitely something you should hold on to. I think just on top of that, we're witnessing some really big and permanent changes in consumer behavior, and I think what that changed in us at Carson is we have accelerated some really cool ideas we've been working on in the pipeline. And previously we were worried about, when you're at a certain size, you worry about disruptions to your BAU with launch of new products and ideas. But now that has been disrupted for us. So we have accelerated a lot of that development work. I think since two months ago. Yeah.
Okay, and I'll get to that in a minute. How about Vaibhav? How has this crisis impacted your business, and going forward, how have you been tweaking your business model, or has it been the same all the way?
No, it has changed a bit for us tactically. I think in the long run it will remain the same. But what we see is that we are doing a quick adoption to some of the realities, right? So, to give an example, right, enterprise sales can't go and meet customers, so we kind of arranged inside sales training and social sales training to all of our sales team members.
Yeah.
So what we did is we completely changed KPI from the revenue to lead generation, qualified lead generation with the target market and senior executives, or C-level executives from brands, retailers. So we're measuring them now. So we still do a sales call. So it's even if the new revenue is zero. And what we discuss in the calls now is purely lead generation and contact establishment rather than an actual sale. So that was one part. We also saw that a lot of people had difficulties to work from home because we're a small team, but spread across 6 different locations. So we had to kind of adjust a schedule to make sure that and becomes a bit more arrange help for some of the team members who are not having an internet access in some remote parts of India where they had to go overnight with their families during the lockdown period. So and we saw that people kind of so some of the developers, they said, look, I know that these 5 guys are not able to work because they had to overnight take a journey and they're not contactable. So developer kind of rolled their sleeves and they ended up doing customer support, for example, right? So we see a lot of team members adopted the roles very fast, which is very great to see. That's kind of in DNA of Enchanter to do what needs to be done.
Okay.
In terms of the business, I think we are not adjusting our product or services. It will still remain same, and we're just waiting for a market to open gradually and then back to the same again.
Okay, cool. And Andy, so just now you're saying that you guys have created an app for, and is that one of your business strategies? Anything else happening at Silot?
Yeah, so firstly, it's actually before the COVID-19. So we see the opportunity and then we just launch it. So I think for us, for example, like a tech-based company, so we see 3 layers of innovations. Firstly, on the fundamental technology. Second layer is on the application innovations. And the third one is the most competitive, which is business models, business model innovations. So as crisis time, I think the money getting cold and it's really hard to raise more money, and the product layer actually need to be start generating revenues. And we don't have too much time to strengthen the technology, but we have to think about how can we adopt this ready technology and ready solutions into the application layers. When the money is getting hot and people start to building based on the existing technology and the application layer, so there are more and more business opportunities, business innovations happening. So I see in this time trend, especially on the economy recession, so more and more players, especially our clients, they become more conservative, especially on lending and also payment itself. So for us, definitely to reduce some costs is necessary. And just now one of my friends mentioned why everyone talking about opportunity, but no one talking about crisis. So I think the crisis is there. No matter how we talk about it, it's there. So we have to think about how can we overcome it. And the innovation and more technology will actually help. So for our perspective, I think this crisis actually bring more and more restructuring for the industry, and definitely survive longer, have a better long run is totally makes sense. And to play a conservative model, then that's more important.
Okay. So, and I think you've touched on my next question, which is basically, should you go on a conservative model, or you want to go on the defensive and aggressive model? Do you want to just capture it for the next second half of the year? How do you intend to go forward?
Firstly, the fundamental is survive longer. It's more important for all the companies, and we could, as unclear situation, I think everyone is conservative because we do not know when will this circuit break or lockdown period will end, and even in the market, we couldn't meet clients, couldn't make sales, couldn't face-to-face talk to investors, or maybe couldn't hire, even interview people. Then stay at the same situation and start continuously to building the value for the company is more important. And when the situation getting clear, so we see a downtrend of the confirmed case, then we can try to be more aggressive with, depending on the financial situations and also the customer on board.
Okay. Blake, how about Lala Move? Do you share the same sentiment as Andy?
I think for us, we again, I don't think we're going to change a lot how we do. We may speed up different initiatives or slow them down, but the one maybe silver lining for us on this is that because certain external things you can't control, say you wanted to open a new market and you can't even travel it, or you wanted to go after a new client and you couldn't go talk to them, we actually have the opportunity to be very planful and very thoughtful, where most of the time we've always, in a good way, been very execution, and then adapt as you go. But now we actually have the privilege of a little bit of time to think through some of the strategic things, think through what other opportunities are, and then make sure that we're fully prepared, that when the external things get out of the way, that we can capitalize on them. So this is, I mean, we kind of sit between aggressive and defensive, but what we're trying to do is position ourselves to be very aggressive, and when the things that we can't control alleviate themselves, we will definitely be aggressive into pursuing those strategies.
Oh, okay. Vaibhav, what do you think?
Yeah, so for Enchanto, right, it's where we are today. We were kind of lucky to have closed the second tranche of investment just Q4 last year, and most of that money is still intact. So because we also been operationally profitable, so but we are very frugal in our approach, right? So we don't want to do anything stupid or go kind of very aggressive, because we believe that the market, the silver lining here is that market will be ready, SMEs and brands will be ready to embrace the concept of multi-channel e-commerce and logistics. But we also believe that the time to ROI will be longer, right? So we don't want to do anything new or stupid. We want to make sure that we preserve our cash. Right? So that's priority number one. Once the market opens, I believe that we'll have to adopt the new ways of selling our platform. Because again, the traveling will be restricted, and we may not be able to have those frequent FaceTime with customers. So we want to prepare more for that and take a very cautious approach. But of course, if there's an opportunity for us to do something which the time to ROI is not too long, happy to take this on a very opportunistic basis. But in general, it is going to be a very conservative approach. We just don't know when this will end.
Okay. And Juliet, what is Customs' approach?
Yeah, I think depends on the area of the company we're talking about. For cash flow and budgeting, we're definitely going on defensive, try to stretch out our cash flow as much as possible. And I think similar to Enchanto, we closed our funding before the turn of the year. That was really fortunate for us, but there is uncertainty in the market. So we are negotiating hard on our payment terms. We put every single expense under scrutiny. We had like all this, basically I have to approve every single expense. It's a really, really worthwhile exercise. I'll encourage everyone, every company to do that. And we put, I think, productivity of every employee under the microscope. So I think this is a time we can't tolerate any underperformance. But I think we are definitely getting more aggressive in terms of product and development. We have, if I'm not wrong, increased our tech teams by 35% since the beginning of the year.
Wow.
And this is already in the pipeline, but we're just, I think, adding gas to this. And we are definitely, I think for headcount, it's a twofold approach. On one hand, we want to definitely be strict on productivity, and on the other hand, we are hiring the good people that's finally available in the market. And historically, that has been the bottleneck of development for most companies in the market.
Okay.
So I think that's the approach. Yeah.
Okay, and just now you mentioned a point which I found very interesting. You said that you're seeing a very fundamental change in customers' behavior. Can you explain more on that?
Yeah, I think maybe just a couple of words. I think when I joined the company, I was convinced that the status quo will remain for quite a bit. And just to give a bit of context, we're dealing with an industry that has been doing things the same way for the last 20, 30 years. In the used car industry, so dealers behave in a certain way and consumers behave in a certain way, especially in Southeast Asia, such a low trust market. So we were of the belief that the situation won't change drastically overnight, and we will continue to fight the same fight we've been fighting for the past 5 years to kind of move part of the transactions online and fighting with the 99% of the market. But right now we're seeing a lot of, I think, proactive inquiries from both sides. I think dealers are desperately looking for more ways to further automate their business and move their business online. And customers are more susceptible to online transaction, contactless transaction. And we're seeing that in China, we're seeing that in US. I think we're quite excited to see what's gonna happen. It's not gonna be a frog leap. But it is a push that we've been waiting for.
Okay, and I presume it's the same for Enchanto, Lalamove, and Silot as well. That this is a good push for users. Yeah.
Yeah. I guess, Yorlin, from our side, just very anecdotally, and this is not even a KPI we look at that much, but our website traffic has gone up 4x since the beginning of COVID. So like that generally just shares, and like this is not a channel that we focus on that much, but it shows kind of the people are looking for solutions, especially digital ones.
I see. Okay, cool. And I think Vaibhav, just now you said that more inquiries have come in as well. So hopefully you can find a way to convert them once this crisis is over.
Yeah, so as Andy said, right, the COVID has been the biggest propeller of the digital transformation in the company.
Yeah.
So there's a realization, and what we also did something unique, not so unique, but what we did is that we started to generate quick case studies and started sharing those on like emails or some B2B marketing platforms.
Yeah.
And people are sitting in front of the computers, right? A lot of time every day now. So we start to see that we have a lot of uptake for our contents, and that is what is driving our leads as well.
What's the last thing you said? There's a high uptake of
contents that we generate. So, for example, case studies of other brands, how we work with them on name basis or moment basis, and describe that how we solve a particular problem, and then it generates a lot of interest. So the content has been, people have a lot of time to read content nowadays, so content has been working for us.
Okay, that's cool. Yeah. Andy, anything to add?
I would like to share something from another angle. I read a very spicy article recently. So the article so when the economy is very good and there are so many players in the market, actually for a lot of good talent, they are spread into the different type of companies. So in this situation in the market, like Southeast Asia, actually the market lack of very good people and very experienced team members. So in the current crisis situation, actually the situation will pull those people into those company that able to survive, and they have an effect that to gathering more and more very excellent talent to be fight in the next level of battle. But in previous situation, the landscape is very messy, and the people is actually people's opportunity actually delayed in different type of companies. There are some like unqualified company should be disqualified in this competition. So the economy actually help to digest or maybe doing some selections to pick up the industry leaders. So that is very healthy for startup landscape. And I think after maybe 5 years or 10 years, this historical moment will actually happening in a lot of articles, I think, in Southeast Asia. In China already, we can see in SARS or maybe in the financial crisis, there are great company just grows into a very large company. So I think this opportunity is actually very good timing for those companies play in the right way.
I see. Okay. And based on this is a very interesting point. And so if we expand on it, right? What is sorry. So on this point, right? Well, what is Silot doing to just grab hold of this historic moment to make sure that you can actually attract the good people, the good investors?
I think for us, I have a mentor told me that financial services, the core is on the trust, and no matter it's banking business or any services related to financial institutions, trust is very important. And for us, definitely important thing is we need to let our investor, team members, clients, industry, everyone know that we have a patient to participate in these innovations and initiatives, because we can see the trend from past years in payment in the different kind of landscape. So in this way, definitely we just now I mentioned we miss a lot of opportunities, actually putting us in a very crisis time, and actually we understand to earning fast money couldn't survive for longer. And anyway, we should be payback. So like the crisis in the Chinese company listed in US, I think more and more effects already happened. So for Silot, we have the patience to start with financial innovations, and from there we building up our core technology. We follow our patterns, and we also have a group of investors. They have a potential with very similar visions. So I think gathering together with a group of team members and also a group of investors is very important to us. So in the past 3 years, we never doing something like urgently trying to make a huge profit, probably that not belongs to us. And this is a right move, and keep this speed. The regulators start to trusting us, more and more banks start to trusting us, and the industry players start to trusting us. So this is quite important to us. Besides on the technology side, definitely in this crisis, building more technology and make the product become more solid, I think is important to all the companies.
Okay, interesting. And Blake, over to Lala Move. The last question for the panel today, for everybody. How do you see this in the future? I mean, how do your investors see you and how you're playing out? You're not changing your DNA, but you're growing in certain areas. What's next for Lala Move?
Yeah, again, I think for us, we've been in a pretty strong financial position because we've focused on that since very, very early when we almost ran out of money a couple times. So we've been, you know, those couple bridge rounds early on were pretty scary when you're 3 or 4 weeks from running out of money. And ever since then, we always said we wanted to be basically default alive instead of default dead, which means that we could basically fund ourselves. And so over the last, 3 years, we worked really hard. And as Juliet said, you have to really rationalize every dollar that you spend. And consequently, we put ourselves in a position where our cash flow is very positive, we're profitable, et cetera. So, it makes it easier to have discussions with investors about your growth plans and strategic plans, because it's your unit economics and the foundations of your company are no longer hypotheticals or assumption based. They're proven track record. So I mean, generally, I would say the sentiment when I talk to not just our investors, but just investors in general right now is it's not that they're not willing to invest. Actually, you still see it, but they're really going to scrutinize how the companies actually scrutinize their own spend, and that the unit economics of the underlying business have to be there for them to feel comfortable to continue to back you, because in certain markets, you don't know how long the economic downturn will be. Especially, I can't imagine being in like a tourist-driven industry or something like this right now. We're fortunate that our business hasn't really slowed down that much. But even so, I think companies that really can show that their cash management was strong before, their unit economics make sense, are going to come out of it with the investors. The money's still there. They're still looking for great founders, great management teams. They have money to spend, but these are the things that they'll really focus on when they look to make their next investments. Even more so, they always said it, but now they're forced to.
Yeah. That's true. That's true. I think the first panel investor was saying that if Traveloka were to ask for more money, they'll invest as well. So I think it's a good point. But Vaibhav, from your perspective, lucky you don't need to go for investment. But what's planned once this COVID crisis is over? You mentioned just now that you're frugal, but I think you're looking for new opportunities. You're building up the pipeline. And then what's next in second half of the year? Any last any point?
So in fact, we announced that we're going to raise a big round in January this year. We started a process, and this COVID thing happened, right? So where we are today is that based upon the experiences, I don't think that at least in our space, you can't raise a round with people that you have not met so far, right? You met them before COVID, and there has been face-to-face discussion that there are some chances that rounds will go forward. But meeting new VCs on a Zoom call and trying to raise some serious money, $30-35 million looks remote. We are in process. Process has slowed down because of this whole COVID situation. It will take time, but for us, is that the plan with which we started this round in January 2020 was that to expand Europe and US market. So the funding was largely for that. So we're still pursuing it, but it will be linked to the funding and then subsequent investment after that. But meantime, to run our business in core markets, we're very comfortable. But every dollar that we spend has to go through 2 or 4 eyes for sure. Otherwise, we don't spend it.
Yeah. Okay. And Juliet, so I used to look. You've closed a round also in December. Congratulations. And then now that you are having this aggressive defensive strategy in products and finances, what's next for Karsam? Oh, Julie, I think you're muted.
Okay.
Okay.
Yes, I'm muted. Yeah, I think cash-wise we're good for a while following the fundraising, and the team has historically been very prudent with the cash flow and spending. I think similar to Lala Move's story, there are a couple of times we cut close. So I think that every time that happens, the team just get a little bit better with cash management. And we did have a plan to fundraise, but not until the end of the year. Around new initiatives of the business. I think that for now hasn't really changed. And the same approach, I think, with the solid unit economics and outsized growth potential. And in fact, we have kind of received a couple of inbound inquiries from investors who see the business as recession resilient, who sees the consolidation opportunity for the segment we're in. So I think we are considering some of the options right now. But I think we're not actively fundraising at the moment. It will be a pretty difficult time to be fundraising right now. I think another note on investor sentiment and putting back my VC hat on. From that world, I think investors are very good at gathering a lot of secondhand information and put it in a very convincing framework to tell their portfolio companies what's best to do. But in terms of assessing new situation, adapting to changes in the market, I think operators definitely more sensitive to that. So I think maybe a word to the VCs listening to the call. I think sometimes after you send enough communication with your portfolio companies and your team, you just need to choose to trust them.
Okay, very, very good point. I see smiles across, so I think everybody agrees as well. Okay, we have 5 more minutes. Any last words before we close off? Anybody wants to do the honors? Yeah. So I think this has been a really good panel. So if I may summarize, what I'm hearing is that cash flow is really important, being frugal, and then managing expenses is also very important. I like what Andy said about that we missed lots of opportunities, and so now you can survive. And I like the vibe of what you were saying is that we're going into more different building up the pipeline and controlling the expenses, and then building trust from the customers. And finally off, I think what I liked from Kasim is basically that even in this crisis, it's opportunity to build up the certain areas like products and take hold of this changing customers' behavior. Yeah. On this note, I think thank you everybody.